all the decisions of all the money in the world is reflected in this. It's simply a question of, is the money buying this?
While the market may move on headlines, many successful retail investors know there's one main trend to follow.
It's noise, ignore it. Look at the money, and the money is the chart.
Felix Preen with the Goat Academy is known for following the money and the action in the charts.
People often look at charts like this and they go, oh, it's too late. But it is actually the stocks that are moving up that are much more likely to keep moving up.
In recent months, markets have rewarded flexibility, punished conviction at the wrong time, and reminded everyone that price can move faster than narratives. Felix Preen of Goat Academy has developed a reputation for cutting through noise, focusing momentum, and helping traders stay aligned with markets and what they're actually doing rather than what we think should happen next.
You will not find a better place that will educate you on how to trade, how to utilize options, how to trade long, how to trade short.
The biggest difference to me in this program was just the one-on-one coaching. The group calls are great, the community elements are great, the videos are great. Felix teaches you rules and knowledge to apply to your own life.
If you could find something simple that has a good success methodology, it's very helpful for people to understand it and grasp it and be able to apply it. Just kind of do it at your own pace.
This is the right place to be in. Thank you, Felix, and everyone else at the Goat Academy.
It's just been really very impactful and amazing.
The best thing that we learned was, how to manage the risks and how to take charge of our portfolio.
I'm feeling more in control. I feel like I've been given the tools, the resources, the knowledge, the education, and I don't feel like the stock market is a big mystery.
There is no better way to learn how to actually trade. You've got to go to the Goat Academy. Very happy with all the education on the platform.
Very, very glad we joined.
Both of us going into retirement.
And then I joined Goat Academy about a year ago almost, learning everything they teach and how to follow stocks and stops and all that stuff has really helped me. And I thought I was doing okay before, but with a little bit of the discipline and the education, it's really made a difference.
My name is Felix Preen. This is Winston back there, and we used to be investment bankers.
I love what you do. I'm so grateful we're friends. I'm so grateful I got to know you.
Felix here. And if you can see me and you can see Winston's beautiful nose, put a 1 in the chat. We want to make sure you can see and hear us right before we get kicking off here. 4,500 people live on Zoom. What a beautiful sight that is. Lots of Aussies I see. Hello there to Down Under. I used to work for Macquarie Bank. If you Australians who know Macquarie Bank, let me know, and also let me know what you think of the people who work there. I gather they were not entirely popular. So I'm going to share my screen with you. We're going to go straight into it. I want to be respectful of your time here. You're here because you want to know how to survive the AI bubble. So let me start with, I think, a feeling that most of us have at the moment. AI is moving faster than anything we've seen. And if you're honest with yourself, maybe a little too fast for comfort. And there is that small sort of knot in your stomach. Most people can't even say exactly what it's about. For some of you, it might be work, that it's changing. For some of you, it might be privacy, or just where all of this is going. And for a lot of us, it's money, right? I mean, look at valuations. They're pretty insane. Look at what's happening to SpaceX and so on. And I want to leave you today with a feeling of there is a clear path forward. I know what to do. I know how to protect myself. I know how to protect my family and what I'm leaving behind, and that's the goal. Okay, so do you feel it too? I should have asked you, right? If you feel that too, put a feel in the chat down below. Some of you say no video. You're probably looking at the wrong screen, my friend, but I'm trying to spotlight myself for everybody. That might make it easier for you. There we go. So look at all that feel there. Lots of feelings, right? Yes. And look, you're not alone, right? And no, you're not being silly. That feeling is worth listening to. And tonight we're going to find out what that feeling is actually telling you. And here's what I'm going to do for you in the next hour. And then there'll be a very long Q&A. So we'll probably do 2 hours. We might do 2.5 hours, given how many people are live here today. I want to give you guys value and answers. So I'm going to give you 3 things in the first hour. So by the end of today, you'll be able to look at any AI hyped stock and tell whether the institutions, the lovies on Wall Street, are actually behind it, or whether it's just a crowd, retail, getting excited. I'll show you which industries are the safe harbor when things go wobbly. And in a few minutes, I'm going to show you live how much of your own money is already an AI bet, including the money that you might think is actually safe and not. So but one thing before I start, I'm not here to scare you, right? I'm not here to scare you into selling your AI stocks. That's not it at all. I'm here to hand you a skill, a way to evaluate for yourself whether you're overexposed beyond your comfort level. And everything I teach tonight is yours. You keep it, it's free. And at the very end, for the people who want to get help beyond tonight, I'll tell you how you can get more help from us if you wish, but that's not a requirement, right? So the teaching is the point of tonight because it's too important for people not to understand this, right? Does that sound fair? Put a fair in the comments down below. And very, very quickly, who the heck am I? Because some of you, well, you're not here to hear my life story, and what I'm going to tell you. I'm Felix. That was Winston down there. I used to be an investment banker, and I retired a fair few years ago. And what I do now is I teach regular investors how to follow the institutional money. And my mentors, the guys who teach me that I look up to, do the same thing in our academy. And that's about it in a nutshell. So why does it matter? Because the big institutions, the guys who have the rules, they have enough money to move the market. So they are the tide. So if you learn to identify where they're moving their money, would you agree you'd be in a better position than someone blindly guessing which stocks to hold? Do you think it'd be useful to see where institutional money is moving? Yes or no? Yes or no? Si or no, in any language you prefer. I see there's a lot of people here. How many languages have you got in here? How many different languages of yes can we get in the chat here? Ja, freilich, somebody says. I know where you're from. And would you also agree that basing your money on the structured approach beats guesswork and sort of gut feeling? Yes? We can get some more yes in here? Brilliant. Okay, so the majority of people never learn these skills. Nobody ever shows them to them. It's not nobody's fault. They get shipped around like a sort of little nutshell in the sea while the professionals quietly profit off them. And it's not because they aren't smart. It's just nobody ever showed them. It is not magic. It is a skill, and a skill can be learned by anybody at any age. So if you write down one thing tonight, write this down. Managing money is a skill anyone can learn, including me. So one thing I need from you before we really go deep is the next hour, and actually the next 2 hours, because the second half is going to also be super, super packed full of value, can change how you invest, can change how you make decisions, can help you protect your money, but only if you're here. If you are scrolling, if you're half reading your emails, if you're watching football or whatever in another window, this is useless. Go and do the other thing that is more important than this for you right now. No judgment, just go and do that. Don't bother, okay? But if you are all in, if you're ready to show up for yourself, then write ready in the chat down below. And let's see some of those. Again, you can do that in your mother tongue if you wish. Can we get 5,000 ready here on Zoom? Brilliant. So 2 quick things for the people who stayed until the end. I'm going to give you a full workbook of this session because my goal is to give you a little bit more information than your brain can fully absorb the first time it hears us, which is the way we learn any skill, right? Remember the first driving lesson and how you felt at the end of that, right? I was not a happy chap by the first hour. I don't know about you. So why do I keep saying bubble? Because everything happening right now feels exactly like 1999. It's not just me saying that. It's most of Wall Street saying it. And maybe you shrug off 1999 as ancient history. But if this one pops the way that one did, we're not talking about a bad week where we're going to get bailed out. We're talking 1999 or 2008 type scenarios, a real lasting dent in your portfolio, your retirement, your timeline massively changed. And that's what's on the table. I'm going to take you back briefly, and then I'm going to teach you the skills here, how to get through this one better. But some of you lived through those, right? Some of you lived through 2000. Any of you have? Just write like lived through it in the comments down below. Some of you are old enough for that, right? Some of you are a little older than me even. So let me give you a number. From 1995 to 2000, I'll get a pen. The NASDAQ ran up about 5x. Can we get a pen? Turn on pen. Why does it always do red? It's so menacing, isn't it? Blue, yeah. So the NASDAQ, you might know it as QQQ, it 5x'd. So $10,000 became $50,000 between 95 and 2000. And if you imagine your portfolio right now, what it's worth right now, imagine turning it into 5 times that in just 5 years, right? Amazing, right? Imagine how that would feel. Like just picture it. You have $100,000 now and suddenly you got $500,000. You feel amazing. Your retirement moves closer, your vacations get better, everything gets paid off and you just feel absolutely wonderful, at least in your mind. Right? Now, what happened then? Everybody remembers this part. This was the good part. This was the 5x part, right? $10,000 became $50,000. So you started down here with 10,000. At the top here, you had 50,000. And then what happened? Well, we went back down minus 78%, which I can't do maths, but it's most of the money you had at the top. Now, if you started investing here, you'd still have some money. But of course, the problem is that most people bought here and here and here, right? And therefore, they lost more than 2/3 of their wealth. And it wasn't a quick journey. It took a long time. Because not only did they lose 78%, but do you know how long it took to recover? For those of you who lived through 2000, do you guys remember how long it took to recover? Happy birthday, Frederick. Yes, happy birthday. 15. Yeah, you guys are smart. See, you guys are smart. 15 years it took. 15 years to get back to zero. So if you were 50 years old and you were going to retire, suddenly you're not, right? You're delaying it by 15 years. And what most people get wrong about the dot-com era is that the internet was real. We would not be sitting here right now, probably in 2 different countries, right? I saw all the countries who are live here at the beginning. Somebody was in Yemen. Is that true? I saw that. Is that true? I hope you're safe. The internet is real. It is the greatest invention of the last 100 years, probably. And it's doing exactly what it promised to do in 1999. It's doing it right now, like us doing this, right? So the technology was real. The technology wasn't a lie, but the stock prices were a lie. And the same is true about AI today. AI is real. Some of you use AI at work. Who uses AI at work? Say me. People use it as therapists. People run their business on it. They book their flights on it, all sorts of stuff. I use it all the time. I'm literally using it to buy antique furniture. I know, I'm a bit weird. Scans through everything, looks at the pictures and the measurements. Amazing, right? AI is real. It's being adopted faster than the internet was. But just because something is valuable in our lives does not mean that the stock market is pricing it sanely. Those are 2 very, very, very different things. So there is real technology, and then there is stock prices. And you can have great real technology, and you can have lunatic stock prices like we had in 2000. And to survive this, you have to hold, well, both happens at the same time, right? So let me make it very easy to see. Just one quick story. Promise you, this is not a story hour I want to teach you guys, but it's important to have the reference here. At the peak in 2000, there was a company called Sun Microsystems. You remember that? Sun Microsystems? Anyone remember? Put Sun in the chat. And it was like the AI names today. It was a real thriving business. It wasn't a fraud. Now, 2 years after the top of the market, its own CEO, Scott McNealy, he said this. He said, for the price people had to pay for its stock to ever make sense, he'd have to hand over all the revenue, all the money that had come in for 10 years straight, pay nobody, build nothing, pay no tax. That would have been the valuation. And you know what he said to investors 2 years later? He said, what were you thinking? So it was a real company, but the price was just insane. The gap between, you have a great business, like this is your business, right? And it's the best business in the world, but your pricing is up here somewhere in the clouds. That is not a gap that you can bridge, not with technology. It was an impossible price. And that's the whole thing that we're seeing right now in the market. Okay. Does that make some sense? And let me show you what the gap cost people, the gap between real business and Wall Street's insanity of speculation. The biggest, safest looking company of that era was called Cisco. They made the routers, or I think routers as do you Americans say routers or routers? Anyway, I say routers. They made the switches that ran the internet. It was the picks and shovels. It's exactly how people describe NVIDIA today. And for a moment in 2000, Cisco was the most valuable company on earth, just like NVIDIA today. This is the chart. And people who bought it at a bubble price here, a lot of people bought it there, I can see it in the charts, right? You know what happened? They lost 89% of their money. It went from $51 down to $6. That means if you had $51,000 at the top, by the end of it, you had only $6,000. You went from well off to pauper. And it took, I kid you not, 25 years to recover. 25 years from here to there. It's only just exceeded its dot-com bubble price. Pretty shocking stuff, right? So buy and hold, it will not protect you. Is that clear? Is that landing for you? Frank is still recovering, yes. And of course, a lot of other things went up a lot during that time. So you're back to zero, while other people made generational wealth in that period, right? That's a whole nother cost we're not even talking about here. So yeah, $10,000 in Cisco would become $1,100. It would take 25 years to get back to the 10,000 years, not accounting for inflation, right? And it wasn't just Cisco. Microsoft took 15 years to recover. Microsoft, right? The most dominant software company on earth. The bastards billed me today. It's good. They make a good piece of software. I'm happy to pay them. But it took 15 years to recover. These were not penny stocks. These are the top companies in the world. Intel took 14 years, right? So you could have bought the greatest business with the greatest balance sheet, one of the greatest founders in the world, and 15 years later, you still haven't made your money back. Right? Crazy stuff. I'm not picking penny stocks. I'm picking Microsoft here, right? What about Amazon? The single biggest winner of the internet, right? I mean, Amazon would not be possible without the internet, right? Everything we buy comes from Amazon. I get 2 Amazon parcels a day. Amazing, but this probably runs on an Amazon server. Those guys lost 94% of their stock. If you had $10,000 on Amazon at the top of the dot-com bubble, it fell to $600. Yeah? Picture that for your portfolio. How big's your portfolio? Just pick, throw a number out there. Maybe for some of you it's $100,000, but some of you it might be more or whatever. $100,000 became $6,000. No way in hell you could retire on that. Amazon, greatest business in the world, many would argue. There's the chart. Doesn't really matter, but here's the chart. Yeah. Now, those were the good guys that survived, because losing 15 years or 25 years was actually a good outcome. Many never came back. Pets.com went public in 2000. They spent $1 million on a Super Bowl ad. They were selling pet supplies for less than their worth, and they went bust. Nortel, who remembers this company? Do you remember these guys? Nortel, any techies in the house here remember these guys? It was at one point worth about 1/3 of the Canadian stock market. It's essentially gone. And there are many other examples I could give you, eToys, Webvan, etc. And a lot of those were actually good businesses. Webvan is literally DoorDash, but it was 25 years too early. Do you know how many companies went bust? 1,100 companies went bankrupt. I mean, you got no money at all Shareholders get zero in a bankruptcy typically. Absolutely nothing at all. Zero. Yeah? Neutral networks. Crazy stuff, right? WorldCom, yeah. Many of them. So let me show you another little chart here. And I'm showing this to you, not to scare you or to freak you out. I just want to show you how dangerous it is to invest on the feeling that, oh, this thing works, this technology is great, it must therefore be a good investment. One mistake, like the ones that I showed you, can cost you 25 years, which is crazy. And people don't warn you about it because the media and Wall Street make money out of selling you stocks. Just be honest about it, right? So it isn't going to stay theory and story here. I'm going to pull up the tools. We're going to look at how much money you have riding on this right now, and then we're going to teach you what to do about it. But look at this chart right here. This down here is Cisco, right? And that was its peak. So if you put $10,000 here, can you guys see that? Okay, can you see that? If you put $10,000 into Cisco at the beginning, at the top of its valuation, you had $75,000. You were a genius. You're telling everybody how amazing the stock market is and how you love it, right? Now, NVIDIA is, if you put it at the beginning, 10,000, and you'd have $175,000 right now. So we've gone a little bit further than Cisco has in terms of bubble. And a lot of that's got to do with the fact that money is worth a lot less today because they printed so much of it. We get it? Let's move on, says Brad. All right. I like impatient people. Okay, let's move on. But some of you are still thinking, I don't gamble on NVIDIA. I own an index fund, right? Who owns an index fund? Who owns an index fund? Who owns the S&P or QQQ? Put QQQ in the chat, or SPY or SPX or whatever. The S&P today is the most concentrated it's been in 50 years. 30% of your S&P sits in 5 stocks. And I can tell you those 5 stocks are all AI stocks. So that in itself is not going to protect you. Okay? But I also can't tell you this is going to crash tomorrow. I'm not a doom and gloomer. I'm not someone who calls crashes in advance. That's none of my business. Because nobody can. It's nonsense, right? People that do that try to sell you, I don't know, gold or something. But every run in history has looked like this, has crashed at some point. So the only question that matters is, are you holding pieces of it without knowing it? And if you are, would you like to know what to do about it? Yeah? Shall we find out? Shall we look at this live together? Okay, so let's first of all, step 1, know your numbers, okay? Now, I've already asked you, but put it in the chat again. If you own QQQ, put it in the chat. Who owns QQQ? NASDAQ. Any NASDAQ fund, any tech fund, actually. If you own TQQQ, my friend, please do something about that. That's insanity. Okay, let me show you something. Because I've got a tool for this, okay? And I'm going to show you how that works. If you look at QQQ, first of all, I can show you what it owns. Let me just pull this up for you here quickly, live, so you can see this is the real data. QQQ's number 1 holding is NVIDIA. Can you guys see that? 8%. Yeah? It's literally the biggest thing of QQQ. Yeah? And if you own QQQ, and I've got a little tool in here, we can click here on special report. How much of my money is really one AI bet? Click find out. And if it works, here, add my names, okay. We click a QQQ, set my addition, and now you see that 62% of your money in that index fund is actually an AI bet. It's the semiconductor, so the red things are more AI, the green things are a lot less AI. Utilities, food, consumer staples, and so on. So it tells you exactly what you own. Now you could also add, individual stocks to that. But let's just say a lot of you guys own the S&P, right? Pretty much everybody does in the US. Why? Because your retirement funds own it. So shall we look at that number? Should we look at that number, or VU or whatever? It's the same thing. Okay, 48% of your money. Half your money is still in it. Half your money is still in AI bets. Does that surprise you? Does that surprise you a little bit? Put surprised in the chat if you are. See or no at all. Okay, it's great. If you guys already know it, I just wanted to make sure you guys understand it. So you can, of course, also put a combination here. Now, what I see with most people is they own SPY, and then they own a bit of NVIDIA, and then they own a bit of, Palantir, and then they own a bit of, I don't know, SoFi, and then they own a bit of TSM or something. They just keep piling up the stuff. Maybe they own a bit of gold too. And then you click on that, and then you get back to most of your money is actually in AI stocks. So the idea that index funds protect us here is unfortunately simply not true. Simply not true. And it's a shame, but I just want to make sure that's really, really clear for everybody, because I think it's very, very important. So I've shown you the real numbers just, right, to give you guys a clear thing here. And what did we just see? We saw that if you own SPY or VU, the S&P, you have about basically 48% of your money is in index in AI. If you own QQQ, it's 63% of your money is in that. If you're in individual tech stocks, it's going to be more. I've seen portfolios that are like 100% AI. I've looked at thousands of portfolios. So what happens? Well, say the market drops by half, the AI market that is. And say you have $100,000 in your SPY fund, what happens to it? Well, it becomes half, doesn't it? It becomes $50,000. Now, if your portfolio is $500,000 or $1 million or whatever, you follow me with the maths, right? Is QQQ high risk? Yes, yes, and yes, right? So we're a little bit cornered here. Yes, you feel cornered, I get that. But, so who's feeling a little cornered by that? Just be honest with me here. Or maybe you knew this already, which is also great. You want to see my holdings? I'll show you my holdings in a bit. Nothing held back here. My number is 36%. Yeah? I still own AI stocks, but it's only a 36% exposure. And I'll show you exactly what those are. In the Q&A, I'll show you the whole portfolio. I'll be completely transparent with you here. Yeah. Would that be useful? Should I do that? Would that be sort of a, open book kind of thing, right? Open in the chat, if that would be an open thing to do, so you can see what I own and how I deal with this. Yeah. But first, I want to teach you the skills so that when you look at my stocks, you actually see something rather than just seeing random stock names. And the other thing I want to do for you is that tool that I showed you, this one here, where you can put in everything you own, all the stocks you own, and see exactly what your exposure looks like, and what happens if the market drops. Do you guys want access to that? Who wants access to that? Just write me in the chat, or access. Yes. 5,500 people. Okay, I hope our cloud hosting is up for it. So I'm going to give you guys a full free month access to it, completely free. You get the full tool. You can check your numbers. You get everything else that's in the Winston app. It's named after this guy down here, Winston. All the stock data in the world, all the index fund data in the world, all the information that's happening there. And you can, it's free for a month, okay? So you can cancel it on day 29 if you don't like it. I'd be very happy if you get your AI exposure number from it, and it helps you realize where you are right now. So I'm going to put a link out here for you. And my team, Louise and Lorraine, if you're here, would you put that link in the chat, gogetwinston.com, so you guys can click on it. And that link will be live while we are live, because 5,500 people clicking on this right now might break it already. Can't give it away for everybody for free, but you guys showed up for yourself. You deserve to understand where you're at. That's always the beginning of understanding what the problem is understanding, where are we right now, right? So how do you deal with this if you get into this for the first time? You go into this app, it'll open on this particular page, okay? And you can click at the top here at Edit My Edition, or you can just click on this exposure alert banner at the top there. And you can put in your stocks, as many as you like. You can put in, German stocks, whatever, Lufthansa. You can put in British stocks, what we were looking at today. She was looking at HSBC today. Whatever, pretty much any country in the world, Aussies and so on, is all there. If you really cannot find a ticker, write me a note here and say, Winston, please add whatever stock. We will do that for you. I'll get that message. If you add gold and silver, you can also tick that. It'll also give you a ton of other insight, and there's an app to it and everything, and it's all free for you. Right? Does that sound good? Is that clear? Do you know how to access it? Do you know how to access it? Christina is 81% in AI. And yeah, feel free to share your numbers here, and I'm going to continue while you guys sign up to that with actually getting into the meat of this. Right? So the uncomfortable truth is, and I say this with, sort of kindness, some of the companies in your portfolio are doing fine as a business, but their price is an illusion to a certain extent. And that's just the stock market, which is why you can't make these decisions from the news or what the CEO says or a podcast or whatever. You need a process. You need a way to check what's actually true, because the stock price is just a number, right? Brad's asking, would Meta be considered AI? Just put it in the Winston app, it'll tell you. Okay. So the pros have 3 moves, and I'm going to teach them to you. Because the only thing that's actually true, besides the companies, the valuations and the headlines and all the stories, because that's just a story, all of it, right? The only thing that's actually true is, where is the money going? Where is it flowing? What do people actually do with your money? So not what they talk about, but what they actually do with it. So I'm going to teach you 3 simple moves, 2 shapes you read, and 1 move with money. And that is the whole skill about seeing where is the big money actually moving, because it's already moving. You can see it. You can see where it's moving. And it's going to be interesting to see, right? So companies talk, we know that. We see the headlines with the CEOs on podcasts, right? They pump their own stock, they get paid in stock. It's a natural thing to do. But money does not lie. Now I wrote here, the chart does not lie, because the money shows up on the chart. And it shows you what people are doing with their money, which is where we start here. And if you're a chart skeptic, I used to be one, I used to think it was complete nonsense and gobbledygook, tell me and stick around for a few minutes, and I think you're going to learn some things that will surprise you. We're also going to look at some live stocks where the money is moving right now in the Q&A. So I'm going to show you not just what I own, but what I'm looking at for next week, literally. Right? So we start first with what? With protection. Because knowing what you're holding right now and what the exposure is, there is a very, very clear warning sign in charts these days. And it looks like this. So you have a stock chart that does that. It goes up and up and up, right? And you think it's wonderful. It's absolutely amazing. And I painted that in the wrong place. Let me draw another one. It'll come clear to you in a second why. So if this is your stock chart and it's just going up and it's making your money and it's absolutely wonderful, fantastic, although the Middle East wobbles might be wobbling you a little bit. But what you might be seeing is at the bottom of the stock chart, there are these lines. Have you guys noticed these lines at the bottom of the stock chart? And some of them are green and some of them are red. You notice that? Let me get a red pen. Who has never looked at these lines at the bottom of a stock chart? Right? Never in the comments. And that's good. Some of you have, some of you are writing volume, some of you written never, right? I want to assume no knowledge here. Yeah, so these are what we call volume bars. And what you often see is that as the stock goes up, the volume becomes less. So what's that telling you? It's telling you that the big money is no longer buying. Because big volume candles like these ones here, you only get them when big money moves in. And where does the big money come from? From you, from me, from Winston? No. I bought like 300 shares of a stock on Thursday, I think, and 1.3 million shares were traded that day, right? So it's 80% big money and then 20% you and me, basically. And therefore, looking at these volume candles is very, very important. It's a warning sign. So what am I saying? I'm saying stock goes up a lot, volume goes flat. That is a warning sign. No one's buying. What happens when people stop buying? What happens? Think about it. Put it in the chat. Right? So you put it in very plain English. Volume is simply how many people are buying. So if the price keeps climbing higher and higher and higher and higher, but your volume candles down here, if they started off at that size and now they are this size, what's going on? Fewer and fewer money is buying it. Less new money, no more fresh money, while the valuation gets higher and higher and higher. And what do you think happens after that? I can tell you what happens after that. It looks like this. If I'm allowed a pen. Stock goes down much more quickly than it went up by, and it does that on big volume. Why? And then the volume fizzles out again. Because in this moment here, that is where our friends on Wall Street sell, where the hedge funds sell. Why do they do that? They understand this rule. Is that landing for you? Is that landing for you? I know it's just a scribble on a thing. We're going to look at some real charts together. But I think it's important to understand the theory before I hammer you with charts. Let me give you an example or two, because that also helps to make the picture sink in. Who remembers Peloton? Who remembers this Peloton? Bike thing, that pandemic darling, right? Everybody was sitting at home on a Peloton bike, apparently. And it was a genuinely good product. I had friends who spent hours on them and they told them it was great. And I was like, I'm not doing that. But if you put $10,000 into Peloton, it went to $65,000, right? So it went up a lot. And then it went down, and then you only had $5,000. So you went from 10 to 65 to 5,000. That is avoidable. But it happens again and again and again, and it's going to happen again and then this bubble bursts. Right? Here's the actual chart. Let me just show you. And maybe you can now start to see what I'm looking at. Let me show you what I'm looking at. So you see the rally up, right? And there's a little thing we're going to teach you next as well. And you see that as we go up, volume massively explodes down here. Can you see that? Who can see that? 5,500 people can see that? Who can't see that? And Lorraine and Louise, thanks for still putting the gogetwinston.com link in the chat as well. I appreciate that. I'm sure some people haven't done that yet, or maybe it's slow to sign up because 5,000 people are trying to do it at the same time. What happens then? Stock goes up really nice and high, right up to here. Volume fizzles out. So the institutions, they bought here. And just picture that. This was the point where Wall Street bought, right? So Wall Street buys, okay? And then what happens? Stock pulls back pretty hard. And what happens? It recovers, right? Who's buying in the recovery? No one. No one. We call it a fake out. That's basically what we call it, right? And what happens after that? It really freaking collapses and you lose all your money. So, where did Wall Street sell? Where did Wall Street sell? Well, they actually sold quite late, probably. Well, there was panic selling here, but really what they probably did, they would have set a stop there, which is why that got triggered. So a lot of them sold here, which wasn't great. They still made money, right? And I can tell you, the reason you topped out at the top there is because Wall Street sold. Right? They sold there and they sold there. They did not participate in the disaster that is, sorry guys, that is this. Messy chart, I know, but hopefully it still sort of lands for you. Yeah? In real life, it always looks a little bit messier than the theory, which is why I'm showing you some real life here. Right? Bob says bullshit. Okay, Bob. If you bear with us, show you a few more, and maybe the proof will be in the pudding, and and then I show you some that I bought the last couple of weeks, and then I show you some that I might buy in the coming week, and you can see the difference between looking back and looking forward as well in the skill set there. Huh? Okay, so another one. I'll give you one more case study. Who remembers Beyond Meat? Now, I'm a vegetarian. I don't like that stuff because if I wanted to eat meat, I'd eat meat. I don't think I want to eat some sort of lab nonsense weird product. So I just don't think I don't see who wants to eat this. It's incredibly unhealthy. It's probably far healthier to eat meat because it's highly processed, but that's not the point here. Your $10,000 became $36,000, woohoo! And then it went back down to pretty much where you started, right? Not so woohoo. So let me show you the chart here again. So you see the initial rally. Where does the rally kick off? It spikes here, right? Massive volume spike on the rally. Can you guys see that? So what happened? I can tell you here, the hedge funds bought. Some of my friends bought this. They made good money with this. And what happens then? Well, you go all the way up here, you get a pullback, right? And after the pullback, you get a second rally, which looks pretty good, right? Because look at the top here, look at that volume. Isn't that beautiful? Isn't that amazing? Look at that. That must be a good rally. So my system doesn't work, right? Well, look a little closer. Look a little bit closer if you can. And this is where the skill I'm teaching you shows that there are levels to understanding all of this, right? I don't expect you to be a great driver after driving lesson number 1, right? You sucked as a driver after driving lesson number 1, right? Who sucked as a driver after 1 hour in the car? Who was a little bit freaked out about which pedal to press and indicators and how many mirrors we had to check, and parallel parking was a bitch. Yes? Yeah? Yep, Andy says not me. No, Andy was born with a steering wheel in his hand. Okay, so when you look closely, these volume candles here, the big ones, actually happened on red down days, these 2 days. This third day here, even though green, it was a massive down day. We went from here to there. So all of these big volume days were selling. So I can tell you that my hedge fund buddies who bought here, the hedge funds, they buy here, and the bastards almost perfectly timed it, and they sold here. And of course, retail kept holding the bag because people on YouTube kept telling them how it's the best company in the world, right? And then, of course, it completely collapsed, and people finally gave up, and now it's worth absolutely nothing at all. Can you see that? Is this live? Says Stephen. You look a bit silly now, don't you, Stephen? I hope it answers your question, though. No, it's a good question. It is always a good question. I'm going to show you some live charts at the end, which will probably prove my point a little bit more. So write this down as rule number 1. Price up, volume fading. It is a stock on borrowed time. And if one of your own names looks like that, it doesn't mean you should sell it right now. No. It is a yellow light. It is a warning. It means pay attention on your terms, on your exit rules, and we can talk more about that in the Q&A. But you want to do that before the market makes it really, really urgent on the market terms. So it gives you a window. And I look at that. I look at my stocks once a week, and I look at exactly that pattern, and I go, maybe we should take a little bit off the flame here and keep some of that money so that Winston can continue to live the life he's gotten accustomed to. Yeah. He only flies private. Is that landing for you guys? Is rule number 1 done? Right, rule number 1 done in the chat? And if it isn't, also write no or confused, which is also cool with me. Some of you are confused. Okay, cool. That's also good. I'd expect that. I expect some of you to be confused because 5,500 people live here, you're going to be on different levels of understanding, and that's completely fine. For some of you, charts are they kind of make your head hurt, right? That used to be me. I used to hate charts. We're going to look at lots more. We're going to do a big Q&A, and it's going to land there for you. If you stick around till the end, I'm going to send you a workbook. You can read it again in your own time, so it really makes sense. But I want to move on to the second heartbeat because I want to be respectful of your time here. It is called the heartbeat. And it is sort of the opposite. And it is exactly what professionals wait for. A stock basically does nothing for a really long time before I ever buy it. Before Wall Street buys it, before the hedge funds buy it, before pretty much anybody ever met who worked inside an investment bank or a hedge fund would buy a stock. And this can sometimes go on for years. In fact, this pattern, I looked at who wants to buy 10x stocks where you 10x your money. And this is not a promise, obviously, but just put 10x in the chat there. Yeah, great. You want to learn the number one thing every 10x stock has in common? Write learn or I want to learn in the chat. Where did this mug come from? Ghastly. Okay. This period, this heartbeat, what I call it, where the stock literally does that before it breaks out. For the 10x stocks, this period, every single 10x stocks I looked up, I think in the last 20 years, it was 2 to 4 years. So you need to find stocks that have done heartbeat for 2 to 4 years as a prerequisite. I mean, past performance doesn't guarantee you the future, but they literally all have that in common, which I think is kind of interesting, right? Does that surprise you? They did nothing for 2 to 4 years before. So it moves sideways in this boring channel. And then you get the initial spike up here. And on that day, it's the other thing I can draw on here. So your volume is also like boring volume candles. And then the moment we break out of it here, your volume went up a lot, often 10 times, right? So you've got heartbeat and you've got the volume skill that you just learned, skill number 1, right? So what does that mean? What does it mean when your volume goes up like this? What do you think it means? Somebody very big stepped in. And the big players don't step in to lose money, and they have enough money to move most stock prices. So if somebody shows up with $1 billion and starts buying the stock, guess what the stock price does? It goes up, right? And then they might have people who go onto television and they talk about it and so on. You get the idea, right? It's perfectly legal. It's the way the system is set up. So what is a heartbeat though? Let's go back one step. So you have this stock chart. What does that mean? Well, typically, it didn't start like that. Typically, real stock charts are to follow. It's a stock that did this, and then it did that. And then eventually it goes back up. So the heartbeat is really the sellers, because this is people selling. They're done selling. There are no more sellers at these levels. Does that make sense? Does that make some sense? Yes. Claro, okay. Brillante, I say to that. Okay, good. So, I want you to memorize these two shapes. You have, on the left here, a stock that, does that often. But importantly, it then forms this heartbeat pattern, this base, and the moment, you get another line here, the moment it breaks out of this phase here, right? We're in this zone, right? The moment it breaks out of that, what happens to volume? So your volume has been doing this. There are a few red candles in there too. It looks a bit like that. Pretty, isn't it? Artisticum, it's probably what I should pursue, right? Drawing things. The moment we break out here, your volume does that, right? And then it calms down again a bit. That tells you institutions have stepped in. So the boring phase was actually beautiful. We all looked for the same shape. I see it all the time. I'll show you some in a moment live. And the moment it breaks out here, that's the breakout. Who just learned the breakout? Write learn in the chat. Who learned the breakout point? Write learn in the chat. Yeah, brilliant. Feels good, doesn't it? Now, what does a retail stock look like? Sort of just a bit of hype. It sort of does a bit of this. Right? What does the volume do? Well, similarly, it sort of does a bit of, ups and downs, kind of a bit random. But there is no clear moment where you're breaking out here and not a lot's happening. Right? You get the occasional day, but there's not a lot happening. It's just a bit random. It's just a bit of hype. Someone pumped the stock, basically. Bunch of retails trading with one another. No institutional money to be seen. Occasionally, a hedge fund steps in at the top and crashes the stock and makes money on that, right? Which is what happens with things like GameStop and AMC and Avis and so on all the bloody time. Again, I've got friends who do that for a living. I don't know why they do that for a living. I think you could trade without hurting people, quite frankly, but that's the path that they chose. Is that sort of clear? Is it clear what we want to look for? Is the pattern, the heartbeat, the breakout, and the volume, is that landed for people? So you've just learned 3 things actually, right? Yeah, brilliant. Okay, so let me show you some real examples here, because case studies help you see this in the real world, a little bit different, looking at my squiggles, and looking at a real chart here, right? So let's look at NVIDIA. Here's NVIDIA. Can you see the heartbeat tonight? I'll show it to you, and I'll use a blue line. Can you see the breakout point? So what do we do? We connect the highs of this heartbeat. Yeah? And the moment where we broke out was here. What happened to volume? Volume moved from here to there. That's probably a 3x in volume. That's very significant on a stock this big. Yeah? Massive, massive, massive volume. Probably something like 500 million shares traded that day, which is quite a lot, I can tell you. It's quite a lot. So 500 million at about $50. Let me do the calculation. 500 million. So $25 billion of NVIDIA stocks changed hands that day. That's not you and me. That is institutional money. And what happened then? Well, rest is kind of history, right? We know where it's trading now. It's gone up very, very, very nicely. So that was a requirement, in my humble opinion, for the stock to go up. It's not the chips, it's not the technology, no, because the valuations are never a fair and direct reflection of what the company does. It's a number Wall Street picks out of the hat. Pretty random. Does that sort of make sense? Yeah, good. Okay. How about something completely different? Who's a gold bug in the house? Any gold bugs in the house? Anybody who owns physical gold or maybe trade golds, ETFs, or holds them or something? Yeah, all right. So the Winston app, by the way, has also the greatest gold information in the world. If you want to see what institutions are doing, it's also in there, so check that out too. Go get winston.com. But let me show you a chart. And I'd already scribbled on it, so it's pretty clear. You can see what I can see, right? Can you see it clearly now? Can you see the heartbeat, my friends? Sorry, I'm using red. I should use blue for consistency. I always get told off by that. I was using blue, right? So there we go. Well, there she is, yeah? That's your heartbeat. Breakout moment, there. Actually, volume went pretty berserk. Just a little, right? Just a little. And it rallied up tremendously. Now, did it top out somewhere up here? Yeah. Did anybody sell at the top there? Well, obviously, on that great big red day there, we saw pretty much the biggest trading that day. So that's institutions taking profits. Still a lot of trading going on in this because it's a very, very heavily traded product. But you can see the pattern before the breakout. That's when gold was 3,200. Yeah. Where do you think I started buying gold? There. Yeah. Around about here, where the first arrow is, actually a bit earlier than that, around about here, I was buying gold minus because they were a bit earlier in this scenario. I had a very similar chart. But this is where I started to buy. Yeah. So am I unhappy about gold price coming down? Not particularly bothered. Now that I've taught you this, do you think if you saw this on the chart, you'd know what to do? With 100% confidence? Just be honest here for a second. Who's got 100% confidence, or maybe 50, or maybe 30, or maybe 20, or just write no? No, okay, I love that. I love the honesty because, again, as I say, this is driving lesson number 1, right? Okay, let's make this driving one of those enormous haulage trucks, right? Most of us can't do that, right? Imagine it's the first hour in that. That must be a bit intimidating, right? And you have to parallel park it in a tiny spot, yeah, with a very low ceiling. This is what the session is. So you're not going to come out of this as the greatest truck driver or the greatest investor in the world because it's only hour 1. And I just want to be very clear with that. It's a skill anybody can learn, but it's going to take you a little bit more than an hour. Yeah? You're going to learn a lot today, but you know, it's going to take you a little bit longer to get really, really good at this. But if you notice what just happened is, my promise from the very start was that you'd be able to tell whether the big money, Wall Street, was actually behind a stock. This is how we do it. You don't ask them. You don't wait for their letter to clients or their research report or one of those lunatics on television who works for, you know, one of the big banks. You watch what they do. You watch the heartbeat. You watch the volume. You watch for the breakout, and you put that together. The big money can hide its opinions, but it can't hide its footprints because it just moves too much money around every day. Right? And I can walk you through a few stocks I bought in the last 2 weeks in the Q&A to make this really sink in for you. And if you're open to that, put open in the chat, and we'll get that done. Yeah, I see about 50 opens in the chat. 5,600 people live. I think we need a few more opens to convince Winston to open up his portfolio. He's asleep. It's about 10 p.m. here in Hong Kong, which is where we are right now. So he's pretty pooped getting ready for the beach in the morning. We had a lovely swim this morning. It was really nice. Okay. I've seen enough opens, guys. I appreciate that. I will do it. And I'm glad you guys are open to it. I've also already asked you this, but I'll ask you one more time. Honest gut check. This number is actually important. On a scale of 1 to 10, how confident are you that you could spot the right place to exit on your own for your AI names before it goes down, 40%, 70% or something? Just put the number on there. Just put the number in there. Let me look at some of those numbers. 2, 4, 5, 1, 4, 5. Okay. And it's the most honest thing that's happened so far tonight. And literally, don't be embarrassed by putting a 1 in there because nobody was born knowing this. And so hold on to that number. We're going to come back to it before we're done. We're going to get your number up a bit, and then I'll also show you how you can get your number up to a 10 if you wanted to get that. You know? And at least one question, right? Okay. The big money starts leaving the exciting stuff, right? But where does it go? Because what most people miss is this: the money doesn't just disappear, it goes somewhere. Yeah. So the stock market is, and I showed you this already. Let me show you this one again here. This is the stock market. It's a little small for you to see. I think, it's semiconductors, it's AI servers, it's cloud, it's interactive media, it's tech, it's IT services, it's electrics, it's software, it's autos, it's aerospace, it's machinery, it's pharma, it's telecoms, it's energy, it's food. You get the idea. lots of squares. And the money simply goes from here to, say, there, or a bit to here and a bit to there. Right? And knowing that and understanding that and being able to see where the money flows is super cool and is what keeps me retired. So the money doesn't vanish. And therefore the answer is not to sell everything and sit in cash, because cash will definitely lose value every year. Inflation is massive. So we want the money parked where it keeps working, but where it doesn't get hurt as much. So what do the big players do when one industry gets too risky, when they think the profits have been juiced out of it? They rotate. They rotate out of the really speculative stuff everyone's talking about into more essential, more boring, cash-generating industries. Think food, power, medicines, things that don't stop. Without power, you and I wouldn't be sitting here. Without food, you'd be hungry and you wouldn't be paying any attention to me, right? I tried that with Winston. This guy's hungry. It's like, it's all over. Doesn't listen. Yeah? I'm pretty much the same. Okay, so let me show you what happened in 2000, and then we're going to look at what's happening right now. And I'm sorry for all the charts today, but it's really the only way to get this across. This is a chart of a bunch of things, and can I get a pen? Red is tech, the NASDAQ, in fact. Right? So Q, Q, Q. And if you had $10,000 in the NASDAQ in 2000, by 2003, you'd have about 3,000 left. Yeah? So what's your number? Do it in your head. You have $100,000 in tech, you'd have $30,000. You have $1 million in tech, you'd have $300,000. Pretty freaking painful, right? But if you put your money in, say, utilities, you had $10,000, and it also went down a little bit. It went to 8,000. Right? It actually went up initially. It went to 14,000 up here, but if you didn't know how to sell or when to sell, you'd be at 8,000. Now, what's better, 8,000 or 3,000? Well, I don't need to tell you that, right? The green line is consumer staples, which basically would be at 0, if I can have 0 here. So this is consumer. Can I have a green one? Yeah. This is consumer. Staples are stuff that you have to, it's not staples. I used to think that. This is my second language. That was very weird. Everyone's buying staple stocks. It's stuff you need to buy, like you can't live without. You know, food, that sort of thing. And you know, you'd be still at $10,000. So $10,000 on that is still $10,000, a heck of a lot better than $3,000, right? Now, boring basically won, and that was the safe harbor. But the safe harbors are not always the same thing, so don't run out and just blindly buy these things. You want to look at what's happening right now. Right? And we can go, maybe you're thinking 2000 was a long time ago, right? Now, I think everybody would probably remember 2022. Do you still remember that? If not, maybe ease off the drink a little. In 2022, tech, NASDAQ, good old NASDAQ, it went minus 30%. So $10,000 in NASDAQ became 7,000. That was 2022. And again, the money didn't vanish. It went somewhere. Where did it go? Well, $10,000 in energy in 2022 became $15,000 in energy. So where did the money go? It just went from tech to energy. Not retail money. They had no idea. They lost the money. Right? Institutional money made money. They rotated. Energy is very unfashionable, right? Boring business, right? But the professional money went there. They didn't go down 30%. Can you see this money flow in action? Are you learning this? Yes? Go boring to survive. Well, we're going to look at what's happening in a moment. We're going to look at the actual industries. We're going to look at some actual stocks in the Q&A of what's happening right here, right now. This is the 2022 chart, just to make it, some people can't do numbers, that's why I put some visuals in there. So this green thing was energy, and the red thing is tech, NASDAQ. No? Opposite directions in 2022. Helpful? Is the chart helpful for some of you, or because the numbers make your head hurt? Some people are more visual, right, in terms of mind, so I try to do a little bit of both. I know it's still a lot of numbers and there's a lot of charts, so I'm sorry for that, but it's kind of the only way I can get this across to you. Okay, 2026. I think everybody remembers that, right? Even the, you know, I don't want to insult anybody, but you know what I mean, right? Do you remember in January, there was a day when NVIDIA dropped, and NVIDIA didn't just drop a little bit, NVIDIA dropped by $600 billion in one day. It was when the Chinese came out with DeepSeek, a model that's far cheaper and doesn't use NVIDIA chips, apparently. So what is happening that day? Well, tech was obviously a disaster. It was getting clobbered to death. Consumer staples went up. Healthcare went up that day. So what was it? It was institutions rotating into the boring stuff, protecting their money. This is where the safe harbor's doing their job, right in front of you. So the whole third move, the third skill here, in one line is money doesn't vanish, it just gets parked somewhere else. Right? So if there's a hurricane, you're not going to leave your car parked by the shore, right? You're going to move it somewhere up to higher land if you can. So one bubble bursting does not mean everything tanks. It means we park our money where it's less risky, and when the storm is past, we might go back to the risky because sometimes it can make us more money. Is that landing for you? Skill number 3, landing for you? Without hindsight, how do you see that life? That's an amazing question. I love your skepticism, my friend. I used to be exactly the same way. We're going to look at some now charts in the Q&A, and you can judge me on that in the weeks to come. That's all I can really offer you. Or what I can say to you is just look at 10 charts tonight on your own and look at if you can see the same patterns. Because I could bore you to death with charts, but I also want to be respectful of your time here and teach you as much as possible. So quick check, honest answer. Do you get it? What would be better? Was this helpful so far? Was this helpful so far? Yeah, John and Frederick and Eamon and Michael and Barbara and Steve. Oh my God, this chat is quick. I can't read it all out, but I'm very, very glad it's helpful so far. That's fantastic. Because now I want to talk about the thing that actually changes your results for the long run. Let me ask you something. And I want you to do the numbers with me, and I'm going to change to a blue pen to be a little bit less menacing here. Do the numbers with me because it changed how I think about all of this. An early mentor did this exact exercise with me on a blackboard, and I never ever forgot it. Do you know how long it took you to build what you have right now? Say you earn, and I'm going to assume a number here, say you earn $100 an hour. It's a pretty high number, right? But let's just stick with me for simple numbers here. It's a lot of money. But then life takes a cut out of it. Tax, the mortgage, insurance, health, food, the kids, you know, the golden retrievers, the 8 cats, the car, all that stuff. And if you're disciplined, after all that expenditure, you save maybe 10%. And be very clear, 10% is good. It's 3 times what the average American manages to save. It actually puts you in a pretty good place. So you keep $10 for every hour of your life that you work. Right? Now let's do the numbers with me. Say your portfolio is $100,000, and you can do this with your own numbers, obviously, in your head. And you make $10 an hour in savings. How many hours is that? You can do the maths. How many hours is that? $10,000 hours. Not dollars, hours. Mornings you got up in the dark, meetings you sat through, time away from the people you actually care about. So the portfolio on your screen, it's not money, it is years of your life converted into numbers. Does that 10,000 hours shock you? And I mean, maybe you're earning less, or maybe your portfolio is bigger or whatever, but you know, you're going to arrive at a fairly similar number. David says, wow, 27 years plus or minus. Someone's done the maths there. Thank you. 10,000 hours or 416 days. Yeah, if you work them 24 hours a day, probably, right? So one of my first mentors asked me this: how many hours have you spent learning to protect this money that you've got? And you guys are cool because you watch YouTube, and that's good. It means you're interested, you care, you've got that instinct about money. But be honest with me, 1,000 YouTube videos haven't made you feel like a master of this, right? Has it? Put in the chat, how many hours a month do you spend actually learning investing skills? Really learning investing skills. How many hours a month do you spend doing that? 0, 5, 2, 3, 0, 20-ish, 1, 2. Okay. And a $100,000 portfolio took 10,000 hours to accumulate. Can you see where we're kind of all going wrong? And this was me too. I'm not pointing fingers here. I was like, fuck. Pardon my French. Yeah, the realization. So you will notice what I just did. I gave you rules that you can watch yourself. I gave you skills. I didn't give you 3 tickers to run out and buy tomorrow, right? And that was very deliberate. Not because I'm going to hold them back. I'll show you what I own and I'll show you what I'm looking at in the Q&A. I promised you that already. But I focused on giving you skills. And it's because the tickers are kind of the easy part. But knowing when to rotate, sell something, buy something else, how much, which names are more defensive this time, and hardest of all, actually having the stomach to do it while everyone around you is still euphoric about the AI thing, that's not a ticker. That's skill, and that is experience. And there's one thing that I want you to really, really take on board tonight. For decades, this knowledge I'm sharing with you, it's been locked inside of these banks. We all got taught it from our boss. Ordinary investors, you and me now, we were never really meant to have this. But it can be learned. It can be learned by you, it can be learned at any age. You are never too old for this. You're not bad with numbers. You were just never taught the rules. But being untaught is not the same as being incapable. You see that? It is a skill you can learn, right? You guys mastered driving, right? Walking, swimming, all sorts of stuff. Hitting balls, kicking balls, all that sort of stuff. Those are all skills. And you learned them for hours and hours and hours and hours with a coach or a parent or something, and you got pretty good at it. And let me ask you again, honestly, has this been helpful so far? Right? Do you believe what you've learned in this hour could have helped you make better decisions with your money? And you can be very frank with me, like I can handle it. And amazing, I love that massively, absolutely. And I would read out all your names, Sarah, Jim, Richard, Jim, Frank, but it's far too fast with so many people out here. And I think there is something that could help you more. And I promised at the start I'd be open with you about it. So I'm going to show you that. And then we're going to look at my stocks and what I'm picking this week and why. And I'm going to spend a lot of time answering as many of your questions as humanly possible here as well. But the thing that helps more than knowing is truly mastering this, really owning the skill. Because think about what that means. It means you don't have to listen to other people anymore. The news, the tips, the guy on YouTube. If I gave you like the 3 greatest stocks right now, how useful would that be? Make you feel good for a little while. And then the money would rotate out of those stocks. It always does. And then you'd come back and you'd be like, there's no live stream. What the heck do I do now? Where did Felix go? Winston, do something about it, right? So it means you don't have to second guess yourself if you really, really master the skills. Okay? So honest questions. Picture yourself a year from now. The market has a red week, and instead of that frozen, what the heck do I do feeling, who's feeling that right now? Who looked at Friday's stock prices? Who's looked at the post-market bloodbath, right? How does that make you feel in one word? Scared? Says who is that? Ron said scared. Sick, shit, panic, upset, uncertain. Yeah. So if you imagine you're a year from now, you pull up the charts, you read the volume, you check the numbers, you can see the money rotating. And can you imagine yourself being in that position? Who would like to be that person? Yeah, we get a few me's in the chat there. Brilliant. 5,500 people who want to be that. We get 5,500 me. This is the Me Too moment. We're not politically correct here. I'm very sorry about that. Okay, so what I said to you earlier, this here is your first driving lesson in that great big truck, right? But when you started learning to really drive, you're sitting in that seat, you were worried about the mirrors and hitting stuff and the car in front and the car behind and all that stuff. And you're a good driver now, probably. Not because you're a genius, but because somebody calm sat next to you until the panic and the uncertainty and the insecurity and the lack of skills got drained out of you. Money works exactly the same way. It's just a skill, but there is no money instructor. There is no money test. Right? There are no money rules that the government prescribes by law. It'd be good if they did, actually. And nobody should really have to learn this alone with 30 years of your savings riding in the backseat, right? So the fastest way to learn this is from somebody who's already done it, sitting next to you until their judgment becomes yours. And I was the same as you. Before I learned this properly, I handed my money to professionals. I randomly bought things I read about in the news, and I lost about half my money when I was 19, 20, 21. I started investing in 1999, which was good timing. And then there was one guy, one banker, an Australian. Any Australians in the room here? He was a Macquarie banker, lovely guy. And he'd been doing this for decades. And he sat me down and he interviewed me for a job. And he gave me that job. I don't know why he did, but he did. And he showed me how it actually works. And then I had another boss and he showed me how it actually worked. And I saw the real version, not the television version. And that one conversation changed the entire trajectory of my life. I have an amazing, beautiful, lovely life that you don't need to hear about because of that one 30-minute conversation. So here's what I want to offer you. Not a course, not a program, literally one conversation, a free conversation where we look honestly at your situation, where you're at, and tell you very, very straight whether learning with us, with my mentors and from us, is right for you or not. And all I'm asking you is if you're open to that conversation, no commitment, if you're just curious, write open in the chat so I know who to look out for. Vince says open, and Greg and David and Peter and Richard and Andy and Nicholas and Michael and Scarlett, and I can only read about every 20th name or so. Alessandro and Andreas and Benjamin and Peter and Vince and Michael and Jibby and Christopher and CK and Mark, and it's amazing. Go faster. I can't read faster. I love that you guys have an open mind. An open mind is the beginning of being able to learn. So I'm putting a link on the screen here for you, and I'm going to put it on the bottom as well so it stays there. We can take a few hundred of these free conversations because we have a certain level of people who can take these conversations. So you can book that conversation at justgoonconversation.com. So you're just a little curious, grab a time now because the spots are going to go. This isn't some scarcity bollocks, it's just the reality about it. If you're open to this next step, one free conversation about where you are and how we may be able to help you, right? Step in the chat, which means you are booking that call. And one thing, actually, I'm going to show you very quickly how to do that. And then don't worry, we're going to go into Q&A. I've got all the stocks lined up. I'm going to show you everything I own and so forth. But let me just show you how this works, just to make sure it actually works. You go to justoneconversation.com. Luis and Lorraine, amazing. Thank you for putting that in the chat here. And it opens a form. You put in your name, like Winston. You put in your surname. This is mine. You put in an email address. and you got to put in the phone number. I don't have a US phone number. Let me put in a Hong Kong number, approximately, and hit OK. We ask for your portfolio size. It just helps to pair you up with sort of an appropriate person. It doesn't matter hugely, so put in whatever number that fits. Hit submit, and then very, very important, it shows a calendar for you. So you can now select a time and a date and a time that it'll show it in your time zone. So 10 a.m. or whatever, click next, and then you got to click schedule event. Okay. Once you've done that, you're booked. There'll be a success message here confirmed. You're now scheduled. Okay. It'll take you to a page where I recorded a bunch of videos, which if you watch them, if you're time short, it'll help to make that call go better and faster for you. And that's really all there is to it. Yeah. Clear? Clear? Yeah. Who's booking that? Right step in the chat if you are, or if you have. And then very, very briefly, I wanted to show you one more thing, because you will notice one thing, right? What have I not shown you today? What have I not shown you today, my friends? I've not shown you a single what? Testimonial. And there's a reason for that. I want to be respectful of your time. I don't want to bore you to death with testimonials, so I won't. What I'm going to do instead is I'm going to show you, if you go to Trustpilot, just type in Trustpilot, Goat Academy is our academy, and it'll come up here at the top. Click on that, and then you can read them for yourself, right? We've got 627 reviews from students. You can read it yourself. I'm not going to do it for you, and you can get a thing there. It also tells you we have a money back guarantee, which we do. We require you to show up for a little couple of things. We require you to show us that you understand our risk management. And if you then decide to join us and you didn't like it, you get a refund because we want to take the risk away from you, which is what we do. Again, you can ask us about that on the call. Yeah? So you can check that out in your own time. I don't want to bore you with testimonials. That's not what this is for. Clear on this, my friends? It is booked. Okay, right step in the chat, or booked if you're booked, my friends. I just want to make sure everybody who wrote open is able to get their spots here. Book. Look at that. Look at that. Those are people with an open mind looking to learn. And you don't have to learn from us, by the way. If at the end of that call, you're like, I want to learn, but not from these guys, I would be equally happy, because I've had a little bit to do with inspiring you to master these skills, which is really what it's all about. So, questions. We've got some, right? Let me pull up. Oh, I need to load a whiteboard. Give me a second. I will do that. I'll just pull that up. And really what, yeah, here it is. Here it is. Microsoft is loading. Here we go. So, okay. Given that we have 5,500 people here live just on Zoom, let me put a couple of questions that some of you guys emailed us before here, and I thought were quite good. And then we'll look at stocks I own now. I'll show you my portfolio in full, and I'll show you the things that I'm looking at buying for on Monday. Yeah? And if that would be helpful, stick around. And while we're live, you can still go to justoneconversation.com. My team will keep putting that in the chat so you can book that call. If those spots fill up rapidly, let us know as well. I know my team are on that and watching it. So am I too old? No. Like the oldest person we're teaching right now, I think is 83, if I'm not mistaken. We have someone else who's 78. She's a grandmother of 5. She learned with us for a year. She did insanely well. She'd never bought a stock before in her life. She didn't have a brokerage account. We taught her all of that. And she's now with us for a second year with her 5 grandchildren. And nothing makes me happier, because we are changing not just one lovely lady's life, but 3 generations. And the earlier you learn this in life, is the impact bigger? Absolutely. But you can teach to other people who are younger than you if you're a little bit later there, right? Second question, got emailed. I don't have time to watch charts all day. Who's busy? Who's busy? Who's a full-timer with a busy job? Put it in the chat. Busy, says Mike. Suzanne's busy. Brilliant. I love that you're busy. Okay. Tell me whether this surprises you. I tell you how much time I spent on my investments a week. 2 hours on a Sunday. That's it. Does that surprise you? That's all I do. What do? I look at the portfolio. I look at some new ideas, what we're going to do literally now in 1 minute. And it takes me 2 hours because I then make a list for my students, which looks like this as a watch list. I also write so I've got on here stocks that I'm finding interesting in the industries I'm finding interesting right now. And then I present it in a way that you guys can actually see it all. And there are quite a few on here. I also put together, we run live sessions every single day, group sessions. You can book one-on-one sessions with everybody. But I also, let me just show you, put out a note every weekend, always on the weekend, because that's when I make my buying decisions here. This is the note from last week. And it gives you the rotation between sectors, between industries. So money is moving out of pharmaceuticals. It was moving into steel, for example. You can see that here, right? And that's helpful because we can then look as an index fund or stocks in those sectors. And then secondly, I also give you a review of where I see the market going, sectors, long-term, gold, bonds, all that stuff. I sort of share my opinion there on that. And would this be helpful when you're looking for ideas, things to buy? If you had my watch list to compare your research against, to compare your understanding against? Yes? Okay. And then if you're looking at a chart, I'm going to look at some charts now. Let me show you one. If you're looking at a chart, where's a chart? There's a chart. And you're thinking, oh, does it look good? Does it look right? Should I buy it? Should I not? Would it be helpful if you could ring a friend who was an investment banker who's retired and we've done this for 20 years? And you could say, hey, this is in my portfolio right now. I'm wondering whether I should sell or buy this. What do you think? And he could walk you through the rules and give you the confidence that you understand it properly. Would that be helpful? You could do that one-on-one on a Zoom. Yeah, would that give you a little bit more confidence? Everybody who put in a low number when I asked for your confidence level earlier, do you think that would up your number because you could really, really ask questions until you really understood it? That's exactly what we do with our students. We teach one-on-one. That's what we do. Yeah, we are retired investment bankers. That's who will teach you. Yeah, and then there's one more, and then I really will show you the charts. I promise. So again, if you think it would be helpful, have a chat with us, and the guys will walk you through what it would look like and whether it might be appropriate for you. justoneconversation.com. Is the market rigged against regular people? Arguably, somewhat, yes. But if you understand the system, would you therefore not understand the rigging better, and therefore you'd be able to make better decisions? Would you not be able to make better decisions if you understood the same things that the guys in the banks had been taught? Yes, 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 of course, writes Rita, surely, writes Joyce, precisely. And that's it. So the market isn't fair. Of course not. If you're Bill Ackman, you can go on CNN or whatever and you can say, this is the greatest stock in the world and I just put $1 billion into it. And then all the media outlets in the world will report about it. What do you think is going to happen to the stock? Yeah, they have that advantage. But we can learn the same things that they know when they selected that stock. We can probably actually see him buying it early, which is what I did last year with Avis, because we know what they're looking at. So learning the skill is what gives us a much, much better chance, in my humble opinion, to make better decisions. Now, this might shock you. This might surprise you. Wall Street does not look for stocks. So when I worked in an investment bank, my boss was the guy who found all the trade ideas. Everything the bank was trading, everything the brokerage team was trading. And I was his right-hand man. I was the guy doing the hard work, and he taught me, and we looked for ideas. And I can tell you, Wall Street does not look for stocks to buy. Wall Street looks always first for industries. So this is kind of like, we're going a little bit more advanced now in teaching, because you guys have already got the 3 rules I gave you earlier. But for people who are keen here, more than 5,000 people live just on Zoom, I love you guys. We're going to teach you a little bit more, which is hopefully going to be helpful for you. So you can screenshot this if you like, because these are the industries that I'm looking at right now. And I put index funds here. Now, if you are in Europe or the UK, you can't buy American index funds. Go into the Winston app and it'll show you the equivalent for Europe or Germany or Switzerland or UK or whatever. You know, those UCITS things you can buy. You just look for financials or insurance or banking or whatever. So just take a screenshot of it if you want. And then I'm going to go a little bit deeper into these, into actual stocks, right? The JustOneConversation.com conversation is free, yes. And my guys will walk you through what it would look like to learn from us. We will look at your situation, where you are, what makes sense, what doesn't. And if it doesn't make sense for you, I think you're still going to come up with a heck of a lot more clarity. And essentially, what do we do with teaching? What do we actually offer you? We teach you the same rules Wall Street uses. We teach you the same structure, the same tools. We help you apply it to your portfolio, your situation, where you are in life, how old you are, what your income is, all that stuff, where you are in the world. We teach around the world 24 hours a day, basically 7 days a week, pretty much all countries, all continents. Yeah? Clear? Right. So the following are not stock tips. I'm not telling you to buy them. I'm not a registered financial advisor. I'm teaching you to apply some of the rules I just taught you and how to see them in the real world. So I'm teaching you patterns, and that'll be a lot more helpful for you because you will be remembering the patterns in a week and in a month and in a year's time when my stock selections are no longer useful. So this is what we're looking at right now: railroads, banks, insurance, chemicals, pharma, energy, utilities, travel, and real estate. You'll notice there is very little tech in this, and that's intentional. So, industry numero uno, and tell me if you're excited to learn more about this. This is an index fund. It's called IYT. IYT. It's a transport fund. And when you look at this chart, what do you see? Can you see anything that we sort of covered today? Helpful? Yeah. So we had what I would call a breakout here. We then zigzagged a little bit sideways. And we are basically doing it again here. That's sort of mini breakout number 2. So 1 and 2. Now you will notice very little going on down here in the volume. With index funds, that's typically what happens because most hedge funds and Wall Street does not buy these index funds. They do sometimes, but it's usually not their first place. But it gives us a pattern, it gives us an industry, it gives us a box, right? Remember these boxes at the beginning I was showing you? Where are my boxes? These boxes. We want to see which box do we want to put money into potentially. And this shows me that transport is a good box, potentially. Doesn't mean you should run out and buy it, but for me, it looks pretty good. So I bought one stock, and I bought this on Wednesday, I think. I actually made a whole YouTube video on this because I thought it was such a good teaching example. And let me show you what I saw. I saw this. Right, so we have a high here, pretty much the same as that one, a little bit higher, this one. And then the moment we broke out of that, this was the breakout. Every time I say breakout, Queen plays in my head with I want to break free. That's how I learned English. Pop music. It's a mess in there, I can tell you. That was the moment I bought it. And what happened to volume? Well, it's almost doubled, which is decent. And it's a railroad. It's not like, a tech stock. It's not a micro cap pharma stock or something. It's a railroad, right? How exciting can that be? And how much are we up by so far? What is that? Can somebody do the math? 330 to 340. It's what's that? 4%? Is that something like that? 8%? I can't do maths. Somebody probably can. Anyway, we're up. We've got some pretty nice candles up here. went up pretty nicely. So I'm happy with it. It's a very good textbook example. Right? Does that sort of help clarify a little bit all the rules that we've learned so far? Volumes are not double, you say. Well, they went from about 600,000 to about 1.3 million or something like that. So it's about more or less double, Yeah. Okay, cool. So let's look at some more, shall we? Would it be helpful to look at some more industries that I'm looking at right now to potentially buy things in? Yes, C, okay. And if you think it might be interesting to get this kind of information every week, not so you can just blindly buy what I'm looking at, but so you can compare your understanding of the market every single week against mine, and then hop on a one-on-one call with a retired banker and go, why is Felix looking at savings banks? Has he lost his mind? And then really understand properly why. If you think that might be helpful, go to justoneconversation.com and have just one conversation with us. Funny pattern, this. Basically, the heartbeat pattern sort of continues here with a bit of a blip in the middle. So what happened? We broke out of it here, right? That was breakout number one. We did it again here. We're doing it again here. So there are more than one opportunity, but to me, savings banks, for some reason, seem to be sexy, right? So therefore, I looked around and I looked at some savings banks. And all of these stocks, as I say, are part of the weekly watch list that I share with the guys. So you could select here banks, actually, what do we call them? Savings banks, right? Where is it? Somewhere in there here. Savings institutions, something like that. Anyway, yeah, they'll be on that list, the ones for this week. And here is one. And some of you might still be thinking, Felix is still talking about this in hindsight, which is true. So we're going to switch it up a section in a second. So you have a heartbeat pattern here. You have a heartbeat pattern here, and you're breaking out quite nicely. Has it already broken out? This is HSBC. It's a British bank with a big base here in Hong Kong. Yes, it is already broken out. This was breakout number one. This was breakout number two. So it's gone up about 10%, which is pretty good for a bank in the space of a month or so, right? Pretty good. So for all of you who are thinking he's showing us old winners, go show us something new. Let's switch it up a little bit. And I think I did that here, didn't I? Yeah, I did that here, exactly. So let's look at this without the benefit of hindsight and apply the rules in real life, in real terms. And this is industrials. XLI is the ticker of this particular ETF. And what you see, well, you see still a heartbeat pattern, right? Broke out a little bit. It's pulling back right now. So we're kind of back to where we started. So what does that mean? Well, the next breakout would be at this level here. So we need to go up a little bit more for this to become a real breakout. So why don't we look at some industrial stocks in here? And here's one that I quite like. Doesn't mean you should run out and buy it. It's called AIMTech, is that how you guys pronounce it? AME is the ticker. And it's rocking a pretty big heartbeat pattern. So where would be the buy? Let me ask you. Would the buy be here at 1? Would the buy be here at 2? Would the buy be here at 3? Mostly 3s. Amazing, which means what I've said so far has been not completely incomprehensible. So yes, it's not 1 and 2, it is that one up there. So it is therefore early, right? Now, this is exactly the kind of thing I look at on a Sunday, because on Monday, Tuesday, Wednesday, Thursday, Friday, I don't touch my stock portfolio. I often don't look at it. I was literally, last week I was in Malaysia, I was traveling, it's lovely. A beautiful country, lovely people, and I'd left my phone at home. I have one phone just for my banking. I keep it separate from my main phone because it's safer that way. And I left it at home. I was away for 5 days. Did it matter? No. Was I stressed about it? No. Did I ask somebody to courier to me? No. I was like, doesn't matter. It doesn't matter because I only look at it on the weekend anyway. Why am I so chilled about it? I'm so chilled about it because I set up my buy orders. I would set it up now if I wanted to buy this slightly above this line. So this would be my buy order. So it would only trigger at this price here. If it doesn't reach that price, it won't buy. And when it buys, it'll also automatically set up a sell order, which will sell probably about here. And that means my risk is defined. I don't need to look at it. I don't need to talk to it. I don't need to stare at the chart and pray it's going to go up. I used to do that a lot. It doesn't help. I just have my system down. I have my rules. Everything is sized in a certain way. Everything has got a sell order on it. And then what happens is when a stock goes up a lot, that sell order moves up, right? And it locks in the profits. So say this thing runs up, when it comes crashing down again, I'm going to take profits up here. And if you want to really master that skill, which is insanely time-saving, anybody can do it because everybody's got an hour or two on the weekend. And you never have to worry about your stocks again. You never have to worry about a crash again. You can stop reading the news and sweating about it. You can stop watching me on YouTube too, which would be a blessing, wouldn't it? Then have a chat with us and see how you can learn this best in a way that fits into your world, right? Stephen writes, is it a 4 to 6% stop loss? No. It's a decent place to start, Stephen, but it's not where I would end up with because it's a bit random what you're doing there. And if you own any tech stocks, which you do, you're going to get kicked out all the time, and it means you miss out on the major rally, and it's just really, really, unpleasant. Does your sell order move automatically? No, I move it once a week. Well, I only move it if the stock goes up 10%. If the stock goes up 10%, then I move it. Otherwise, I don't do anything. So it's always a nice thing to move your stops up. Now, there's one question that I get a lot, and I also got it in a lot from your emails in the last day or two. Who's worried about paying more tax? Say you become a better investor because you're learning the skills. Who's worried about paying more tax? We got some me's here. Suzanne says yes, Joe and Andy and Benjamin and Donna and quite a few yeses, right? You don't want to send more money to your government. Okay, so say you got better at this, and say you made an extra $1,000. Okay, promise you an extra $1,000 just as an example. And you live in a country that has, say, a 30% tax on investments. What would you have? Well, you'd have $700 extra. Right? Now, if you don't learn the skill because you're worried about making extra money, what do you get? Well, you get zero extra because you know better. Right? So, very, very serious question. Would you rather, put it in the chat, have $700 extra or $0 extra? I see a lot of 700s, and hang on. Alfie, and Andrew. They put zeros in the chat. Alfie and Andrew, my friends. Here is a very special piece of advice for you. Go into Google and type in insane asylum near me, and then call it and report there. Yeah, I'm being serious because you're certifiable, right? It is, of course, better to have more than not have more, right? So even if you live in some sort of communist safe haven where the tax rate is 50%, you'd still have $500 extra, which is still better than a kick in the teeth or a kick in the groin, right? So tax is not something that I ever think about when I look at a stock chart. It is never something I think about when I'm buying or selling something. If you are, stop. What you need to do is you need to get some tax advice. I'm not a tax advisor. So there's two things I would do. Explain your situation to an AI like Claude or Google has it built in now, right? Just do that. And then secondly, go and pay a tax advisor for 1 hour of his advice. It'll probably cost you a couple of $100, and now you've got your plan. If you're in the US, you'll probably say, get a Roth IRA. If he's smart, he'll say, let's look at backdoor Roth IRAs so we can really max out the wonderful, massive loophole that sits in your tax system. If you're anywhere else in the world, there are similar systems and structures where you can put money into something that is going to be tax-free as it grows. Nicholas says, move to Dubai. Yes, whatever you got to do, you decide that once. But it never, ever, ever impacts your decisions when you're looking at something like this. Tax has no place here. Yeah? Is that clear? Bit harsh, perhaps, to Andrew, but yeah. So, shall we look at another sector that I'm looking at right now? Here, XLP, consumer stuff. And why am I looking at it? Well, can you see the heartbeat tonight? When I say heartbeat, I also hear partially in my head Elton John singing Can You Feel the Love Tonight, which is also weird, I know. It is how I learned English. Lion King, that's the one. So what are we seeing here? We're seeing a really nice heartbeat. And let me give you some bonus skills. There's a low here, there's a low here, there's a low there, there's a low here, and there's a low there. What do all the lows have in common? Each one gets a little bit higher and higher and higher. What does that mean when these lows go higher and higher? We're finding buyers at higher prices. Is that a good thing? Yeah, right? It's trending up. What does it mean? People with real money are putting real money into this at higher and higher prices because they have an expectation that it's perhaps going to go up. But we're not going much higher because every time we hit these highs, the sellers sell. That's a heartbeat. Right? Eventually, the sellers will get exhausted, possibly, and if they do, we move up. And that's why we wait for the breakout, when we make the cross, and we don't second guess the breakout. Right? Is that somewhat clear? Clear as mud? And there's a day chart, by the way. Each candle is a day, for some of you asking that. Bob's your uncle clear. Great. Now, look at this chart here and tell me if you would buy it, where would you buy it? Would you buy it? I'm going to give you guys two options. Here. Here. Or actually, I'm going to give you a third option. Or here. 1, 2, 3. 1, 2, 3, 3, 3, 2, 3, 1, 3. 1, 2, 3 with volume. Yeah, okay. We have 3 opinions in the room. And none of you are wrong. And the answer will depend on your portfolio, your risk levels, how many income streams you have, your age, and a bunch of other things. And to really, really, really get that down to you want to have a piece of paper on your desk with all your rules. When you buy, when you sell, how big the positions are, and you only ever follow that checklist. But that checklist is somewhat personal because you are special, very special. Special, what's the song there? Special in it? It's also ringing in my head. No, but I'm being serious. And that is something, if you want to build that with confidence, so you know whether it's the 1 or 2 or 3, you got to do that with a human being who really understands this one-on-one. And at the moment, we are 1 to 5,000, plus the YouTube crowd, which I can't see here on my screen. Sorry about that, guys. Second-rate citizens. Well, just sign up for the webinar and join us on Zoom, and then you can chat with me. That's the limitation here, right? So this is one to many. If you did this one-on-one, we'd look at your portfolio and we'd see exactly where your gaps are. But yes, this is a lovely, 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 jubbly, happy heartbeat pattern, and it's actually one of the nicest ones I've seen for a while. Doesn't mean you should run out and buy it. And it's on my watch list. It's kind of high up on my watch list. Again, doesn't mean you should buy it. Doesn't mean it's going to go and make you a millionaire by Friday. But again, look at the lows, right? So they're going higher and higher and higher. But I still wait for a breakout to somewhere here. And I then want to see some volume candles that are getting a bit bigger. That's basically what I'm looking for. No? Is this helpful? Is this helpful, or am I just talking into the wind? Let me know if this is helpful in the chat. Yeah, really helpful. Okay, brilliant. Would it be more helpful though if this was one-on-one with one of my mentors, who are the guys I ask? One-on-one. Put one-on-one in the chat if this would be more helpful one-on-one. Yeah, one-on-one. Si, senor, one-on-one. Okay. Well, you know what to do, right? To explore that, just go to justoneconversation.com and just take that next step. If you're going to take that next step, let me see some steps in the chat there. Everybody who's booked a call already, write booked in the chat. Let's see it. Andy says step. I'm seeing a lot of books here. Booked. Carl and Mark and Gary and Sophia and Claudia and Doug and Mohammed and Carl and Kristen and Gunnar and Carol. I love you guys because you're action takers. And you're like, it's a problem. I can see it, right? We all agree on that. I want to figure out a way to do it. The guy's throwing me a way to maybe do it. Maybe it'll work for me. Maybe it won't. But let me go and ask the questions. That's what smart people do. Right? That's what action takers do. But the vast majority of you guys won't take action today. And I also understand that, and it's human psychology. And I'll talk a little bit about that in a second, but let me show you the next industry chart here on the thing, so you guys get a little bit more learning in here, even if you are not an action taker. And what are we seeing here? Seeing a pretty nice heartbeat pattern, right? Now, where are our highs? There's some here, but there is also that one there. So that for me is the one where I want to get up to. So it's probably at about $55. My watch list will show you the exact dollar amount. I only share that one with students, by the way, because it's not responsible. I'm not an alert service. I think it's incredibly irresponsible to give people buy alerts because, well, you don't know what to do with it. And some of them are going to tank, and then you don't know what to do, and then you're going to hold it. And then you're going to be down 30%, 50%, 70%. You're keeping a secret from your wife now. I'm causing marital problems. We don't want any of that, right? And ladies, if you're listening, that's true, by the way. So one thing I would highly recommend, piece of side advice, once a week, sit down and talk about your finances. It's going to suck the first time. It's going to suck a little less the second time. And by the 10th time, you're going to actually really enjoy it. We do it every single week. We know exactly what's in portfolios. We know exactly what's invested. We know exactly what the income was for the week. We know all of it. And it takes me about 20 minutes to prepare. And it just means the family is on one path, including Winston. He knows too. We're a good group of women and goats, says Sarah. Yes, more and more of you are somehow clawing your way in. No, I love that. And actually also, gents, if you are married or in a relationship of sorts, then do it together. Why? Because women are better risk managers. It's very simple. It's something in the genetics or something. They are just better at handling risk. We are sometimes like, just close our eyes, it'll be fine, They don't do that, and it's a good thing. So take advantage of that. So here, it's a Illyrian MLP ETF. It's some sort of mid-pipeline type industry thing. You can Google it, AMLP, or look in the Winston app. So I saw that, and I like the setup. So I looked for actual stocks in it. You could just buy the index, but I tend to buy stocks. And I found this one here, and it's called New Jersey Resources. I wish I could do a New Jersey accent. Got someone I work with who's got the most glorious New Jersey accent. And, right, so it's here, but it's broken out but, and I'm going to erase my line here so you can see it, I would argue it would need to go above the recent high here now, so 59.50 or something like that. Again, it's not a buy recommendation, but what do I like about it? Well, we had some really bigly green days here, which is good because typically that means someone's positioning a little bit early with some real money because that's some real volume there. And I'd like to see that again when we move out and break out to, around about here. Doesn't mean you should buy it, doesn't mean I'm going to buy it, but just as a lesson, right? No volume confirmed yet, no, but we haven't seen the second breakout yet. Should we do another one? I talked to you guys, and I think I talked down at you a little bit there when I said some of you are not action takers, which is a bit unfair because you're here, you're on the weekend, you're showing up for yourself. So let me show you one, just very, very quickly. This was the mindset gift that changed what I do and how I do it and how I've run my life since. I had a mentor, chap in Australia, in Chicago, and he drew this for me. He said, Felix, you are here. Right? I never mean to talk down at you, as I sort of say it in jest. He said, you're here. And he said, your best skills got you here, your hardest work got you here, everything you've got you to where you are. But you're talking to me because you want to be here, up here. And there's a problem. Your skills, your hard work, your love and your labor got you here. They're not going to get you up there because there is something in between these two things that you don't have. What is that thing in between those two things that at the moment you don't have? Knowledge and experience. Balls, says Joe. Time, experience, action, money, luck, passion, discipline. Yeah, look at comments. I would describe it as skill. That's all it is. There is a skill gap between where you are and where you want to be. And how do you bridge that skill gap? Well, there's a problem. You have to go and learn it. And learning stuff doesn't sound like much fun, does it? I mean, if you said to me, you need to go back to university and do another degree and do exams, I think I'd cry. But I do learn new skills every week. And I love that because I do it in my time, in my setup, from the comfort of my home. And I mostly do it on Zoom or with people I like and want to spend time with. So the problem is not that you need to acquire skills because you can acquire skills. The problem is that you won't, right? I would assume here out of the room, probably 4,000 or 5,000 of you haven't booked a call and haven't taken that little step, that little leap of faith to have a conversation with us, even though there's no risk there. And it is this that's holding you back. So he said to me, Felix, what's your why for being here? And I said, well, I want to learn to get better at investing and trading. And he said, no. I said, well, I want my money to grow. And he said, no. I said, I want more time freedom. And he said, no. Actually, he wasn't that polite. He was swearing every time I said something. And I said, I came up with all this stuff. And eventually I sort of went from here to there. And I said, I want my family to be proud of me. And he said, that's the one. Now I'm going to teach you. And I thought, what a dick to make me jump through that uncomfortable thing. But I realized what he did. He wanted to establish that I was going to actually be motivated enough to learn, because learning requires a little bit of effort, right? And he thought if I didn't have that motivation, I wouldn't do it. And it's the thing that separates, I think, people who are really successful and people who are not, is when you asked me back then, what did I like, what did I want? I was like, I don't know, sort of vague stuff would come out, financial freedom or something. So what I'd love for you guys to do, put in the chat, why do you want to learn this? Why do you want to get better at managing your money? And don't give me a number. Don't give me, I want to buy a Ferrari. Give me something that has some emotion attached to it. Ideally, doing something with somebody you love, you care about, your children, that sort of thing. and I've got a ton of stuff in here. Trip to Europe, quitting my job, wife and kids, says Ishmael. You're a good man, Ishmael. Because it's fascinating. That does actually work for some people, especially retirees. I get that quite a lot. Freedom, reduce stress. Yes, ready for retirement. Make a difference. I want to buy a Lambo for a child. Okay, I love that. Who said that? Vince. That's a good one. Feeling in control. Survive communist Brits. Independence. Give my dogs a good life. Yeah. But the more you can feed something into it where it's for somebody else, the more powerful it becomes. So I don't want torturing you here with sort of self-help gibber. I'm just saying where you are right now, whether or not you become more successful as an investor is not skill. At the moment, it is 100% what? Mindset. Do you have a mind that's open to learn? Do you have a mind that realizes that if you simply found someone, doesn't have to be me, but found someone who's here where you want to be and has the skill set, and they teach you, you could cross this bridge in a heartbeat rather than in 30 years. Yeah? And when I say somebody, where if I and my mentors repulse you, which is incredibly fair, find somebody who's worked in investment banking, not ordinary banking, there's a big difference, investment banking or in hedge funds, because those are the people who get taught how actually to run money. Nobody else seems to really have any idea. Yeah? Is that somewhat helpful or is it really annoying? Let me know in the comments down below. I'm only teaching you this because I know it really made an impact for me. And then we're going to look at another opportunity I'm seeing right now, right? So Holden says annoying. I love your honesty, Holden. Keep that. It's a good thing, honesty. All right, I show you portfolio. Okay, let's look at this chart. I'll show you portfolio. We'll take some more questions. Okay. Okay, so this is real estate. XLRE is the index, and I saw this, and my eyes popped out twice like in a cartoon because you don't see this very often. All right, this is 3-4 months of just going sideways with a slight upward tilt, exactly how I like my charts. Yeah, I live a very exciting life, I know, but it's showing me that people are selling this a little bit less, people are buying a little bit earlier. So I went in and I looked at some real estate stocks. Now, I initially did that today just before the session. I normally do this on Sundays, but I did it a day early for you guys because I wanted to deliver this to you. As I say, it's the same thing I deliver on my students every week. So if the little mindset jingle helped a little bit there, and you maybe found that why, you might want to have a conversation with us and just go to justoneconversation.com while we're still live here. So what do I see in this chart? Can you start to see this a little bit? Well, just here you see this, right? And you see another one here. You could also zoom out and make it a bit bigger, but essentially, what have we got? Got highs here, got a high here, we've got highs here. So if I crudely draw these across, you have a zone here that if we break out of certainly the top one, it would look kind of textbook-ish, right? Now, the only big candles we see, big volume we see, are on green days. Yeah? So somebody is buying this, and pretty big volumes compared to normal. So I'm quite liking it. Now, what does this thing do? It's actually a REIT, a real estate investment trust, that owns self-storage. It doesn't get any more boring than that, right? So I kind of like this one. Yeah? Kind of like this one. We got another one? We actually have another one, but you guys want to see portfolio first, right? You want to see portfolio first? Who wants to see the portfolio and has booked a call? Right? Booked or write BP. Okay, let's do a little game here. If you've booked and you want to see the portfolio, write BP in there. If you are going to take the step to book a call and you want to see the portfolio, write SP in there. And if you are blocked in your mind from booking a call, right? Blocked. Already part of GA, Matthias Pabst. I've seen your name quite a few times, Matthias. How's it going for you? Share it with us. Okay. Now, for you blockheads out there, maybe talk to the people who are writing BP and SP. It's a lot less letters, it's a lot less effort, which is pretty much how this works. Because you can spend the next 30 years of your life trying to figure this out, trying to watch YouTube videos, and alternatively, you can find yourself somebody who's just going to tell you how this works, which will save you about 30 years or a lot of letters. Yeah? So you see what I did there? Yeah? But there's still an option to change your mind. Who's going to change their mind? If you're going to change your mind, write change in the chat, which means you're now part of the STEP crowd. Stefan has just changed his mind. Congratulations to Stefan there. Well done. And that's a very long name there. Duangchan Montes. Modify, that works too. We're changing people's minds and lives. Elijah also as well. Detlev is changing his mind. David is changing his mind. Fritz is changing for the better and taking some action. Isn't it a wonderful word? Frederick is changing his mind. I'm a Felix stepchild, says Frank. Well, I'm glad you didn't say you are my child. That would be slightly worrying, wouldn't it? Bruce is changing his mind and Lucas is changing his mind. Amazing, guys. Book a call, literally. Go to justoneconversation.com and that way you'll actually get all your questions answered. But I am not going to hold you hostage. I am going to show you the insane asylums. Where was my portfolio? Here it is. Oh, it's locked me out. How marvelous. Let's log me back in. I have a lot of email addresses, as you can see. There we are. Okay. So actually, I can show you here on the homepage. This is what I own at the moment. SPY, S&P 500. OEF is the largest 100 stocks of the S&P 100. I own PGR. I'll show you quickly what the charts are as well for the ones we haven't looked at yet, okay? Just to make this a little bit more useful. PGR, you'll be able to see why. It's just a transparency exercise. I'm not telling you to run out and buy these. And this will surprise you because I'm showing you a real dud. Well, first of all, I show you why I bought it. And you know, I find it annoying people on social media only if I show you their winners, right? We all have losers. It's the way this works. We had this very nice heartbeat pattern here. And then we broke out of it. So I bought it. I think I bought it here. I think that was the buy. It went up quite sweetly, about 12% in 10 days or so, pretty good. And then what happened? Well, it collapsed and we're slightly below where we started. What happened is earnings were not as great as people are expecting. And that's always a risk. Have I sold it yet? No, my stop's a little bit lower than that. And I'm actually quite happy about the last couple of days because we're consolidating here a little bit up along this line, which is actually quite an important line. But yeah, I want to just be clear. Sometimes these things, you know, turn into losers. And again, I just wanted to be open with you. So I'm showing you all of them, not just the cherry-picked ones. Yeah. Okay, next chart is eBay. I bought eBay. And I believe in miracles. I bought it here. There, basically. So it went up a little bit. Right now, we're basically at zero. Again, it was only about 10 days ago, so you can't expect miracles. Pulled back a little bit. That was largely just the market overall, but you'll see that on most stock charts right now. The Friday candle, the green candle there, it's got some pretty decent volume, which I'm quite liking. There's a takeover attempt of eBay by the lunatics at GameStop, which might make this stock potentially move. Again, I'm not telling you to buy it, but you can just see it. Something I literally just bought. So there we are. We're sort of at zero, but you can see why. I'm going to show you another one that's not doing very well. And you'd be surprised, right? Felix, I thought everything you buy turns into gold. That's not quite how this works, my friend. I bought Ralph Lauren. Why did I buy Ralph Lauren? Well, first of all, I'm buying actively non-AI stocks to reduce my risk. And Ralph seems to be turning into a coffee chain, apparently, judging by my trip to New York. Very nice heartbeat pattern here, right? Sort of there, right? So what did I do? I was a little late to the party and I bought it up here. That was my buy. So sometimes I'm a little bit late to the party and that's completely fine. And then stock tanks a little bit. Now my stop was where? I think my stop was initially, I get a red line here. So I didn't get kicked out. And one thing you'll notice is that on the way down, and I'm not trying to sell you the stock or be an optimist about it, that was the previous low. This low is a little bit higher. We're actually recovering. On the sell-off, we did not see a spike in volume, which is quite a good sign. So no institutions were really jumping out of this on scale. It's just a bit of a general market wobble. So I'm still in on this. And the jury will be out, and the jury will tell the time whether or not this will make me money or whether it won't. But I mean, at risk here at the moment is about 7% or so. Yeah. Helpful to see some that are not brilliant. Here is one, HASI, that I bought here. Again, nice rally up, about 18%. It's pulled back to zero. Right now we're sitting at about 5% up, which is actually not too bad. This is sort of a finance stock. Again, the sell-off was not on crazy volume. A little bit people get shaken out here. I'm not loving the 50-day moving average line sloping down, but other than that, it's just one of those things. I let it run there for a bit, or it gets stopped out at some point, which is also going to be fine. But not everything is a loser. We've also got this little friend here. Where is she? Hang on. There she is. This is a stock called TENB. I think I actually talked about this on YouTube. And I bought it here. That little baby is up 53%, which is pretty sweet, right? And of course, easily makes up for a stock being down 4%, 7%, 8%, right? Which is kind of how this works. So why did I buy that one? Well, this is a little bit more of an advanced one. And again, I want to just show you there are layers to this skill onion. So this is a stock that came down pretty harshly, quite a lot, pretty big collapse here. Let me get a pen. Where did my pen go? Is this helpful, guys, or is this just the ramblings of a madman? Helpful? Okay, cool. So stock collapses, right? Not interested. Bottoms out. Not interested. Why are we not interested at the bottom? Don't you want to buy the bottom? Who wants to buy the bottom? Who wants to buy the bottom? David says ramblings of a madman. Love that. Frank wants to buy the bottom. You can't, because you don't know it's the bottom until the bottom is behind you. Now, it's a bit like you can't see your own bottom. You know, sort of a strange analogy, but you get the idea. You only knew it was the bottom approximately somewhere, here. But that's a very risky place to buy it, which is why I didn't. Some institutions did here, clearly. And then we ran up. More institutions bought it here. I bought it there. Why? Because that was actually a little heartbeat pattern. Broke out of it. More institutions bought it here. We pulled up, we pulled back again. Some people took profits. Heartbeat pattern, we break out. More institutions buy it, right? And now we're up, 53%. We're pretty happy. And what have we got at the top? We've got a heartbeat pattern. Messy, but heartbeat pattern. So maybe we break out again, in which case, brilliant. Maybe we don't, and I'll sell it somewhere, in that zone. So, winner, right? We do get some winners. And this is actually a software company, small software company. There is another one here, TMCI. I bought this very recently. Here, it's at present up. 8%. It's actually more than I thought. It's pretty sweet, right? So similar. This is sort of they do make dental instruments. I hate the bastards. you know what I really wish dentists would do? Make the water warm. I hate that cold water. Anyway, the stock commits suicide, goes down and down and down. Eventually, there are no more sellers left. Then here, some serious institutional money pulls it back up. Few losers sell again, make it go sideways. It moves up, but no institutional money. And I spot it a little bit late, put in a buy order that gets triggered there. That is good old me. And then a few days later, another institution clearly buys it, and we're up, 8% so far. But this is really a very, very tight heartbeat pattern, really. So the hope, of course, is that it's going to break out of that, but hope isn't the strategy. Strategy is having rules, having systems, having this automated so that we buy and sell when we want to, not when we are hopeful. And then wasn't there another one? I thought there was one more. No? Okay, maybe there's one. Is there one more? I thought there was one more. Anyway, here's one more. The last one, NSC, Norfolk Southern, the railway that I already showed you guys earlier on the chart. I bought it here. It's up about 4% so far. And it's just a clear, to me, breakout out of its sideways action here, taking out the highs. I was 3 days late, which I'm perfectly happy to. Volume has increased quite nicely, so I'm happy with it. It's a railroad. It's not AI, right? That's all you hold? Yeah. I typically aim for about 15 or so stocks. Fluctuates. Why does it fluctuate? Because my selling is automated. So before I buy, I decide, my writing is horrible, right? Where to sell. So that means that some things sell themselves during the week, take profits, or maybe it dips a little bit, and that's a very happy way of doing it, because who's done this before? You bought something and it went up a lot, and say it was up 30%, and then it went down a little bit to 20% up, and now you're like, it's got to come back, and it does a little bit of that, and it goes down some more. Now you did 10% up, and now you don't want to sell it because you feel like you lost all this money. And then, of course, now it goes down some more, and now you're sitting at -10 or -20 or -30%. Have anyone done this? Feel familiar? Yeah? It's because you haven't got an automated exit rule. And it's also because you're human and you're an emotional being. So the problem is, on the way up, you say to yourself, I'll sell it when it goes up 30%, but you get greedy and you want 40% now or 50%, so you don't. And then it goes down, and now you don't want to realize this loss you have in your head between the 30 and the 20, and now you go down, now you're -10, and now you don't want to tell you can't sell it because you haven't told your wife, right? So that's what happens, and that's why you guys typically hold stocks in your portfolio that are down 30, 40, 50, 60, 70%, right? Who's got something in their portfolio that's down 30, 40, 50, 60, 70%? Put those numbers in the chat there. What have we got? 30, 40, 50, 60, 70, 90. Wow. 55. Yeah. Look at those numbers. It's avoidable, my friends. In my humble opinion, it's avoidable. Large losses are avoidable with automated risk management. And I can't teach you everything there is to know about risk management today, because we'd still be here in a few hours. But the three things we allow. We allow big wins. We allow small wins, and we allow small losses. We don't have a fourth option. That's what good risk management looks like. And you can never, ever do that with emotions. If you are pressing the sell button yourself, you will turn the small loss into a big loss. I guarantee it. It's just human psychology. I've read like every psychology paper and book on the planet pretty much on investing and trading, and it's a feature of our system. It isn't a bug. But once you realize it, you've got to learn a system that you can implement. And I can tell you that system in itself will be worth a heck of a lot of money, because it's the lowest hanging fruit. I always say to people, first thing we can do is just teach you how to not have those big losses again, because it's so painful, it's so avoidable. It sets people's lives back by years. It makes you stressed and miserable and all of that, right? Ladies in the room here, when your husband has a bad time in the stock market, is he more stressed and more grumpy and more short with you? Yes, yes. Mark says yes. Nikki says yes. Sarah, he's not, I am. Okay. Sean says yes. Angela says yes. So he says yes, yeah. It is just that, again, it's us, right? It makes us into beautiful people because we're emotional, but it is also something that's avoidable, and it'll make your life better on many, many, many fronts, right? So we had another chart to look at, didn't we? Did we? Did we look at this one? We didn't. No. I wanted to give you an energy play as well. Why? Because it's a heartbeat pattern, right? Now, you will notice initially the heartbeat is sloping down a little bit, which we don't love, but now it is decidedly sloping back up, which we prefer. And it's actually quite a nice little heartbeat pattern here. So XLU is the index fund there. I always prefer to look at individual stocks because I think if you know what you're looking for, there's a potentially greater opportunity there, but you could also do index funds if you're happier with that. It's certainly simpler. And what do we see? And I'm simplifying here a little bit, but you get the idea. We're getting a nice breakout here, right? You're like, it's too late. You get another one here, right? So that will be the second potential entry up here. And we haven't seen a massive volume spike or anything on this. Now it is a utility. It's not the most sexy business in the world, so you're unlikely to see like candles of that size because it's not, tech or something. But you'd still want to see some decent volume when it breaks out to see that. But it's the sort of thing that I look for and that I like at, right? Do you normally trade to cash? You mean when I sell? Yeah, it goes to cash. So I don't use margin. I stay away from margin. Margin is a killer. Why is margin a killer? Well, at some point, one of your stocks is going to go down, say down 20%. It's going to happen, right? So if you use margin and you haven't got enough cash in there, your broker is going to say, we want the 20% cash now, and you haven't got it. So then you're selling that stock at possibly the worst moment where maybe you didn't want to sell it. So your sell rules now get dictated by the brokerage. Korea yesterday had, I think 3% of their population got margin called yesterday, like including babies and grandmothers. Don't do what the Koreans are doing. A nation of gamblers apparently. So one thing I would look at, and again, this is something that we would do on a one-on-one call with you. We'd look at your portfolio, we'd see where you're at. But one thing I would always look at is how many stocks do you own, and what's your risk, what's your position size? And most of the time what I'm seeing is people are taking far too much risk on far too big a position. People are far too much in one industry, in one sector. I already gave you the tool for that at the beginning. But for you guys who booking that call, justoneconversation.com, and then maybe going to take it further, that's kind of what I would do. I'd say, look, okay, say you have number of stocks, right? This is how I assess risk. Say you have 5 stocks you really believe in and you have some sort of religious fanaticism over, or you have, say, 20 stocks, and we still have that one of the stocks crashes 20%, right? Let's just say it's going to happen. So how much money are you losing out of your overall portfolio loss, which, let's face it, for most people is just, your liquid wealth loss. Well, if you have 20% drawdown on 5 positions, each of these 5 positions is 20% of your portfolio. So a 20% drawdown of 20% position is a 4% loss. 4% of your money just gone like that overnight. And that feels pretty bad. It's a real kick in the stomach. You don't normally experience 4% losses in a day unless you have a pretty insane portfolio. But if you had 20 stocks in your portfolio, each one would be a 5% position, right? So now you get the 20% drawdown. How much are you losing? You're losing 1% of all your money. Still a little on the large side, I would say. Still a little on the large side, but it's much more manageable than 4%, right? So you want to look at how big this position size is on the basis of the risk you're able to take. By able, again, I mean, if you're here and you're 28 years old and you've got 3 income streams, you can take a little bit more risk. But if you're here and you're 50 or you're 60 and you've got maybe 1 income stream in your family, or maybe you're already retired or planning to in the next couple of years, you want to take a little bit less risk, right? So maybe we don't want to take 1% risk. Maybe we want to only take a 0.5% risk. See what I'm saying? So maybe we want to then make position sizing a little bit smaller still. And then you can also take us to the next level where we would say, okay, where is that sell order? Because that tells you essentially how big this potential drawdown could be. A little bit more complex, a little bit more advanced, but I just wanted to give you guys a flavor of how institutions manage risk. Right? It is not, oh, I like the stock, let's buy whatever cash I have right now. That's not how this works. Yeah? The markets crash, doesn't everything crash? Okay, I'm going to have to go back a few slides because 2022, tech crashed 35%. Energy went up 53%. NASDAQ went down 70%. Consumer staples went up, well, they went to 0. They went up initially 30% and then went to 0. So no, it's not true. The myth that everything moves together is just utter nonsense. Yeah? It's nonsense. And it's because people look at it, and it's a very, very common myth, because the media, the noise that takes the news, talks about the S&P and the NASDAQ as if it's all one thing. It's not, right? There are 150 industries on the stock market, according to the NASDAQ. We look at these individual industries. Yeah? We don't look at the market overall. Who cares? Because within that market, the money moves from pocket to pocket, and it leaves big elephant-sized tracks because it's billions of dollars moving around. So if you want to learn how to follow that, you got to find yourself a guy who's worked in one of those institutions because he was taught how to do it. And I can teach you a lot here, and we've done 2.5 hours now, which is a little bit longer than I was planning to do this. It's almost midnight here. But I want to share this with you. I want to give you value. I want to also inspire you, because this is driving lesson number 1. And you can't expect to learn a skill and be good at it. Right? Who plays a sport here? Anybody play a sport? Put your sport in the chat. Golf, Lisa. After 1 hour of golf, how good were you exactly? I mean, it was embarrassing, wasn't it? You were hitting the grass, it was flying everywhere, your shoulder was hurting, your back was tight, and you had a golf arm. It was terrible, right? I know, because I tried to learn a little bit of golf. It's dreadful. And it's the same for everything, right? Hockey, anything. This is, you're an hour in. Yeah? And does it take a long time to learn? It'll take a couple of hours a week. We teach you for 6 to 12 months. Why do we teach for 6 to 12 months? because the market is different over that period. If we taught you for 6 weeks, we might be in a blue sky period where everything is perfect and you're like, I'm a genius. And then the market drops and then you don't know what to do. So we want to be with you long enough that you can call us every week and we can give you not just the skills, but also the confidence to apply them in different kinds of markets. And that's really what this is about. Yeah, okay. So where are we? We're here. Are we at thank you? Is that where we are? So 2 more things. One more time, and then I'll let you get on with your life. If you want to learn this properly, with people who've done this for 10, 20, 30, 40, 50, my oldest mentor, you can talk to one-on-one, Jerry, is an amazing soul. He's about 78. He's done this for 50 years. He ran billion-dollar hedge funds. He was one of the first floor traders and so on. If you want to potentially learn from those guys who really know how this works, some of the kindest people in the world at the same time, have a conversation with us, right? You've done 2.5 hours with me here. The conversation will be maybe 30 minutes. And by the end of that, you'll have 10 times more clarity than you have right now. So go to justoneconversation.com. And I want to thank you for spending this evening with me. I very much enjoyed this. I love doing this. And if you're wondering why I do this, I get these lovely messages every single day from my students, and I see how their lives change. I see how their skills improve, how they're more confident in making decisions. You can read our Trustpilot yourself. And it's just insanely gratifying. I've run businesses. I've made a fair amount of money in my life. I'm very fortunate that way. None of those things really gave me that much satisfaction. Yes, it's nice to know how you can pay the bill, but selling something, shipping something from A to B, I have a wine business and a chemical business and a bunch of other things, satisfaction isn't really there. You can do something where you can use your skill and your knowledge or your experience, and you can help change someone else's life, because you are the one changing your life. I can't do it for you. I can nudge you. Sometimes that's annoying, sometimes that's inspiring. It's for you to judge, but I can give you the tools. I can give you access to the people that I learn from, that I look up to. And I then see the outcomes. A few weeks later, a few months later, sometimes a year later. I have people who write to me every week are saying they're retired, or they're just bought their wife this, or they're taking their family on vacation for the first time, or paid off their kids' student loans, or they're just sitting at home with their toddlers and a laptop, and they're managing their money, and they're not missing the childhood. Like it's that real. And it's just, I mean, you know, I'm an emotional soul, so I could, you know, wallow up about that, which is also why I don't show testimonials, because it's embarrassing to see me blither on as a wreck. But it's just the nicest thing I've ever done. And as long as you guys are there to learn, as long as there are people to learn, I'll continue to do it. And you know, financial education is a joke. You know, I've an economics degree. It's useless, right? I became a corporate lawyer. Useless. It was only when I sat in a bank on a trading floor and my boss was next to me watching my screens, that's where I learned it. I read books before. Yeah, they're good finance books that are inspirational. You can read Tony or something. It's inspirational. And then you can buy the stuff that's so technical that you want to kill yourself. Very little in between. Some decent books on some tax planning, but most of them will just say, buy less Starbucks lattes. That really isn't the solution to life. You know, you want to enjoy your life. Money is there to help you enjoy it. And that's all it is. This isn't about money. It's about the options it gives you. It's about the choices it gives you. I wake up every morning when I wake up, and I love that there is no alarm clock. I used to hate it. Getting up in the dark and going to work in the rain in London and Hong Kong. And this morning I woke up 7:30ish or something, and I went down, and Winston was all excited, and I said, come on, let's hop in the car, let's go to the beach. Played on the beach, met another golden retriever. They swam for an hour. I went back, had a bit of breakfast, and worked on this a little bit to find all the charts to show you guys. And it's a fun day, and it's a rewarding day. And I know for a lot of you guys who are full-timers, you got full-timers in the room here? Put some FTs in the chat if you're a full-timer. It doesn't always feel like that, right? Because often when we have corporate jobs, I had corporate jobs, I worked 10, 12, 16-hour days, often 7 days a week. You don't always want to do that. You don't always love your boss. Maybe your client is a dick. But you're doing it because you're a good person. You're responsible, right? You're looking after yourself, your family. You're paying a mortgage. You know, you've got obligations, and that's why you're here, because you're that person. But the money you are earning is not why you're earning it. The money you are earning is your business. That is your job. And once people really understand compounding, and maybe Google it after this, and we have a compound calculator you can play with on the website, you see that the money you bring in is just the seed, and it'll grow into a great big beautiful oak tree if you let it. But you have to water it. And what most of us are doing is we're pulling out the seeds and we're letting the weeds grow. And it's just because we haven't been given any financial education. It's a freaking scandal, and we can talk about why that's happening. Follow the money and you'll understand why, I think. But you now know that there are rules to this game. It's not random what Wall Street does, right? And if you're still skeptical about this, read the earnings reports of the big banks that came out last week. They all made billions of dollars in the last 3 months trading. They didn't sit there and got lucky. They didn't sit there and find a magic stock and know it wasn't all insider trading either. They have a rule book and they follow it, and they're very disciplined. And by discipline, I mean there is a guy who checks what you're doing. When I sat on the trading floor, open plan floor, behind me was our risk manager, right? He would just look at what you were doing all the time. It's really annoying. You walk around and ask everybody, really annoying. And nowadays they track your screens and they have cameras, and they do that because they know we can't trust people. I don't trust myself to sell things at the right time, and I've done this for a long time. I trust the rules, so I automate it. So having said all of that, learning this skill, I think, is the lowest hanging fruit in everyone's life. I think it is the one thing that could potentially transform your life completely. And I don't promise you outcomes. You'll notice I didn't say you'll make X or this is our average, none of that. I promise to give you access to people who've done this for decades at Merrill Lynch and Bear Stearns and the big hedge funds, at Deutsche Bank and SocGen and all the big banks. And we will teach you the rules that we use every week, that we apply, that we learned in institutions. That's it, very simple. So if you're interested in that, to learn that, go to justoneconversation.com, or just go and kidnap a banker on the street and force him to teach you. That's not the best piece of advice. If somebody does that, I'll be in trouble. I wish you guys a beautiful 2026. I wish you guys a safe phase of this market. Market moves in phases. And I hope you guys are going to take some action. Start with a conversation with us, justoneconversation.com. And I'd say Winston wants to say hi, but he's fast asleep and very unlikely to. I don't think I can show him to you. Can I show him to you? I'm not sure. No, can I? Hang on, laptop. No, he's just down there. Hang on, I can maybe. Winston. Oh, there he is. Come on up. Show your beautiful little face. Oh, there we go. Oh, there he is. Can you see that? I'm not sure you can see that. I think you can just see my knees. Anyway, he's a sleepy little puppy. And you can wear shorts as well when you are retired, which is a good thing because you manage your own money. Workbook will be emailed to you, my friends. We know you're here. We know you deserve it. And I thank you for watching. And I admire an open mind. It is a rare thing. I admire people who actually show up for something like this because it was fairly dry, right? It was pretty technical, but it is just what it is. I don't want to tell you beautiful stories and show you pretty pictures and go all big picture. I wanted to actually give you something that's actionable, but it also comes with a warning that you're at level 1 of this. There is level 2 and 3. Yeah, so use what I've taught you today with caution. Risk management is where the money is made, and all the best, guys.